big butt, just a big dump. You see what I'm saying?
Right.
It's crazy when you think about that, right? But again, therein lies how we've been spoiled, right? And in some form of a fashion, of thinking that the market do no wrong, and we're just not used to this kind of stuff, and you know. But again, there's people who've been in this game for a while. They've lived through worse, right? They've seen worse, right? Right? These body dippers, these Robin Hooders, these Wall Street bet types and the likes of that nature, the Reddits, whatever. These guys are new to the game. They just jumped in some of them jumped in out of necessity under COVID, right? And they went straight to AMC GameStop because it was an internet movement, social media movement, sensational value, whatever. And at that time, that body dip, theory in that perspective, of course, it panned out, right? But those are the anomalies, right? Those are the anomaly aspects of what you would look at on a daily basis and say, well, these are good plays, right? To look at for, a more than abnormal duration, right? We're talking about well over a year plus, 2 years, 5 years. Is it a 5-year plan in mind to buy AMC at $2 a share? But yet there was failing going into COVID. You see what I'm saying? Now, could they have a Phoenix moment during COVID and rebrand themselves and come out with something bigger and better? Okay, but they came into COVID with a mountain of debt. So that means you got to acquire more debt to get yourself stable to try to find a way out of debt, right? So you're gonna spend more on SG&A, right? You're gonna, your CapEx spending has to go up. You still got to take care of your creditors, and still try to rebrand the business in a way where you can make money, or at least get back to a place where you can, you're not just hanging out in the red so much, right? Of course, that's definitely the story of AMC in a nutshell. Literally, that's the entire story of AMC, no matter how we look at it and cut it. And we still see the theater business, just, sidebar, but it's within the realm of what we're going to discuss today. We still see the theater business still, it's still, wishy-washy right now, right? It's not people just screaming to go back. Well, we know the blockbusters do get some people attracted. Again, it's, people feel comfortable in their situation based on the science of the vaccinations and all this, that, the third, whatever. But we still don't see the knockout drag out across the board. You can't have it in certain cities and lackluster in others, right? Pre-COVID, it was just, you can pretty much bank on people going regardless of whether they were able to make money on their situation or not. But if you still got, spurts of people utilizing that service or going to the movies, and it's just not a whole lot, endemic, or people feeling comfortable being out in the public again, just going to movies, kicking back, and being in public spaces, then yeah, it's still a lot to be assessed there in terms of whether or not this is a great bottom fishing asset. And so today's conversation, we're just talking about that, just in general, the value of bottom fishing, right? Bottom fishing, good assets, good opportunities, good good market energy. And these things are based upon what though? They're literally based upon whether or not we have a marketplace that is susceptible and also suitable for that kind of risk on, right? Because we still got to get through everything else that we've been discussing literally over the past year and a half, 2 years plus. Knew was going to come into this moment. What's going on, Overshawn popped in the building. Peace, power, profit to you as well. Everybody might be tuning in on the YouTube side. Thank y'all on this Thursday, right? We're doing our little Thursday training session. Shout out Oba Zane in the building on the YouTube side. Oba Zane Montego in the building. Shout out to you, Oba, today as well. All right, as more people may kind of come through indiscriminately, right? Because I didn't get a chance to really get broadcasting that we're gonna have the session because I'm late, but we on typically Thursday. This is our day to go live, right? Even though I'm behind. So thank y'all for your patience again for me this evening here. Being stuck out there on that old dusty highway out there in Baltimore, right? I was creeping through Uncle Ket backyard today, right?
Yeah.
I was creeping through Baltimore, right? You call it Baltimore. When he said Baltimore, I was in Baltimore.
Yeah.
It's kind of my old stomach grind to a degree too. I was, actually live a little north of that. Now I'm south of that. It's weird how that works, but that's it. That's weird what it is. But yeah, so as you see on the screen, even right now, right? We got Costco up here on the screen here this evening. And this is just again, another kind of scenario, if you will, of what we've been talking about far as, because right now, what is the theme of the day, right? Or I should say, what is the narrative that we're hearing out of Wall Street, right? If I've just asked you guys right now, what are you hearing out there on the streets in terms of where we are for sentiment in the market? Anybody want to chime in on that? What are we hearing out there? What are they talking about? What are they putting out there for us publications? What are they baiting us into, I should say?
Right? Relief rally. Stocks are going to go back up.
Right.
A lot of these, hedge funds and, big time investors are saying, they could see the S&P rally 22% from where it's at now.
Okay.
It's that kind of thing. But, they well aware of a recession as well. So.
Right. So recession as well. They kind of beating that drum a little bit as well.
Playing both sides.
And relief rally in the same breath, right? So they're playing, trying to play the middle, right? You can't be wrong when you play the middle, as they say, right?
Right.
Must be two sides, right? Like, oh, look, pick a direction. Just the other day, y'all was just like the bottom was in, whatever. And then when that failed, right? Of course, that was all good just a week ago. When
it's a week ago.
Right. You know what I'm saying? It was like we hit that 410. We broke below, hit that 410, bounced and got back to 420 and rallied back to 462. And then after that, it was clearly, what we, on our side, we deemed to be a dead cat bounce. The data just was not there to sustain, right? Such a move, right? It was just a vicious bear market rally, right? Those are some of the most vicious rallies are pretty much stoked and produced under bear markets. Why? Because the pullbacks are so degrading, such a degradation on bulls, psyche, that anytime they feel like either RSIs are completely panned out, a lot of the stocks that are, heavy overweight and certain where people got their money at, and they take big beatings and people just can't rush to come back into kind of dollar cost average in a certain spot because they all kind of waiting for somebody to make the first initial move. And then when it happens, these stocks bounce, right? It's not so much that they bounce because everybody's excited about stocks again. For the most part, is what's happening. Short sellers are doing what? Covering on massive profits. They're covering and causing the stocks to squeeze back up. Now, when a lot of shorts cover on a stock that's been beaten down all at once, it only takes a few buyers to step in and ignite that rally. Why? Because as people cover, the stock squeezes more with buying pressure coming in on top of the already beaten down stock, right? This is simple physics, right? In that regard, it's like releasing the pressure on a teapot, right? You open up a little bit, you hear that, you open up real by skin and start screaming, right? All that steam just kind of come all at once. It's the same reality when it comes to what we consider to be a short squeeze, the ideal of what that looks like. And so what they're doing, they're bottom fishing a lot of that, these beaten down stocks who are really, really just kind of beat down. And they're saying, okay, well, at least at this point, we feel comfortable dollar cost averaging in right now, regardless of what the earnings are, right? A lot of the earnings that we're seeing too, I mean, and I'm not trying to play the Debbie Downer, but they're not that great. They already had low bars coming into their reports. They already had reduced their bars. I mean, you go look at, literally, if you go like places like, let's see, let's go to the site real quick. Let's just type, we're going to hop around just a hot second here. But I mean, a lot of this is based upon, again, the bar has been set so low. I mean, like, how could you miss, right? It's kind of, it's kind of stoked in that kind of energy. You know what I'm saying? Like, only way you miss this is you just, just really can't cook the books, right? I mean, you got a bad chef, bro. You know what I'm saying? So, that's just the kind of, with the windfalls that are, that kind of, thrown around out there a little bit. But nonetheless, the market is still trying to, play off of these kind of, these moves or these particular ideas of what they will look like if we can get a small relief rally, if nothing else. And then, that's that, right? But yet and still, we know about moments like this when we get a lot of hard data out of the way. Of course, we go through like a FOMC meeting, or we go through per se something like some GDP. We just got GDP obviously recently, anything to that nature, right? What happens is a lot of these stocks, that if they really were at their most, ugly or beaten down perspective going into that print, or that whatever, they'll get a relief rally, just what they call like a sympathy bounce. Right? We've been seeing that a lot with these retail stocks, like the earnings come out, they're just horrible. Like, Urban Outfitters, right? They were just horrible, right? And then guess what happened, right? The stock lit up. They had a triple miss. They missed on guidance, EPS, and rev. Like all three, and the stock went up. It not only did it go up, because some of them just kind of go up and just try to kill option, it actually squeezed up from literally like what 18, 19 bucks, somewhere around there, all the way to like 24. Like, I mean, you couldn't make this stuff up. As if the supply chain issues were going to be getting better tomorrow. But how can that have been the case if they guided lower, right? You don't guide lower on good expectations of what your business having good favorability that it's, you know, bounce back. Make sense? So a lot of this is, you know, baked into whether or not we can really read into a lot of what's really happening. And for the most part, guys, we've been here before. We've seen this stuff. And it's, again, it's not that we take the bearish tense to everything. It's just that until they can change the order of business in terms of this, you know, overly leveraged Keynesian marketplace and allow the free market to work for itself, hence the way that economies need to what? Weed out all the bad actors. In this case, it's really the governments, right? To be honest, these central bankers, then you would never have the ability to see who can sink or swim. That's what they tell us every day, sink or swim. You got to make good decisions. You can't just be out there willy-nilly and just buying in and everything, right? You're gonna get ran over, especially if you against the trend, right? But that's not the case with Wall Street. Wall Street gets every lifeline that you could potentially even think about, and then some. And I mean, they make it so easy for them that it's just like, I mean, you couldn't make it, you know, couldn't make this stuff up, right? What's going on, Iba Monica? Iba Monica in the building. Shout out to Miss Lamb in the building, right? Tri-City Visionaries coming through this evening. Happy to have her here, right? So again, this is what we're dealing with, guys. We're dealing with the idea of the bottom fishing, right? The bottom fishing, you know, mentality. We know we're here for what they call staycations. We bounce, we move on, right? We bounce, we move on, right? We as they say, we wash, rinse, repeat, right? Wash, rinse, repeat, right? So no harm, no foul in that regard. You even just hypothetically, you look on my screen, we got Costco up here, right? Can you guys see my screen here? All right. This just, you know, coming on Zach's website, just kind of giving an idea of what they look like, right? Because Costco will be somewhat like a bellwether for what? For the retail and the consumer discretionary and the consumer staple all in one, and somewhat of a, you know,
can't see the chart over.
It's not showing. Okay, let's see here. Oh, dang it! Yeah, I didn't click it twice. My mistake. All right, there we go. There we go. All right, so Costco would be the offshoot of a few different sectors, right? Cross, you know, it has a cross reference in value, right? Because it moves between different, you know, different industry, different spaces within that, and you know, as of today, literally, right, because they had earnings tonight, that's why we're definitely looking at them for a moment here. You know, as of today, it's sitting at, you know, a consensus value at that of a hold, right? Well, at least on Zach's side, right? We know these hedge funds, they doing what they're gonna do regardless, and giving crazy buy ratings, not buy ratings. It's just all over the place, right? But we're talking about a stock that should be built for what? Inflation. It should be built for, you know, the consumer staple value of being able to produce, you know, to provide things for people who are more conscious about spending, right? Because these are more ubiquitous type of what purchases that most people are making, right? Groceries, be it in bulk, you know, especially if they're trying to plan ahead of what more worse inflation coming, they buying in bulk, right? It has a different type of client, right? What type of clients are they dealing with? Are they more low income? Are they middle class? Or are they more, you know, mid to upper class, right? That's how you would have to assess that, right? Because you would have to have a revolving door of people coming through to equate that of what the value that they either have to increase the prices on their stock, on their items in the store, which is most cases we call that a margin boost, right? They get an extra boost to margin just by way of the financial ecosystem, and they can do that and pass that cost off to the consumer, right? I mean, we was talking about this literally months ago, about when these moments start to happen. This is what you're going to see, right? You can start seeing them incrementally increase in prices, whatever, right? Because they have to compensate for either less foot traffic or just the more expensive cost of raw goods and services, right? That's what's going to keep a business, let's say like a Costco, you know, maintaining, if you will, right? Now, whether they can thrive in that environment, that's to be determined, right? Well, a lot of us thought, just case in point, that Walmart would be above all stocks, would be that kind of play. When y'all wouldn't have made that kind of assessment, like Walmart, like every shop, right? They pretty much in every city on the planet, it seemed like, right? Literally on the planet. I ain't even saying in America, this is a planet, it's a Walmart. But you can probably go to Sentinel's Alley with them Vietnamese people. They probably got a Walmart somewhere tucked in the corner of the island. You
Mhm.
walk up with bow and arrows, and pigs and everything. Like, man, let me get some of that charcoal. But I'm gonna barbecue tonight, bro. I'm barbecue. But they're everywhere. Seriously, Walmart's literally everywhere. And what happened with their earnings, right? They ran it was obvious, right? But they ran into the print, right? They ran up into earnings. And we knew that regardless of what we were seeing for the inflation, inflationary data that was coming out, we got the CPI, the PPI, we had this the PCE that the feds love to look at the personal core expenditure, stuff like that. All these different things that are out there that, manufacturing them are durable goods, right? Durable goods important. How important was that readout just recently? Very important, right? Because it showed another leg of what of softness or weakness out there in terms of between that and Empire, Empire manufacturing number come out of New York. That stuff showed weakness. They're still showing weakness, and that's before you even start thinking about the housing sector, right? Because we had a big contraction on the housing data recently, right? And that's ugly because we already know the real true barometer of your nation or your economy is based upon your what? The value of your quote unquote land. Not so much items that you have in your house, it's about the land because they put a big wealth tax on what? On land. Make sense? Your biggest tax come from what? Land. It don't come from, a diamond ring or a hoop in the garage, with a lot of pipes on. It comes from that land. And so, yeah, we always know this to be true. The true barometer is based upon the housing market, right? Because those are 30-year notes, right? Fixed or adjusted nonetheless. But it gives people time to work into those moments. If those start defaulting, there's tax liens, all this stuff, and repossessions on that, then you can pretty much all but imagine what the subprime credit aspect markets will look like. I mean, those are what short-term credit duration, right? That's credit cards, car loan, stuff like that. If the housing people are going under, you already know subprime, they're gonna be in the dumps, right? Because that means they've already maxed out credit cards. You know what I'm saying? They've already overextended themselves in loans or whatever. You know what I'm saying? It's a domino effect. It makes sense. So interesting enough, we're already somewhat seeing that those kind of data points coming in fruition, right? We're hearing that, since January of 2022, obviously up until this point, they're saying Americans have already lost about $20 trillion of somewhat of buying power. 20 trillion. Right. And that's not even saying if they liquidated portfolios or not. Right. They're just holding right there and they hold them on, right? Holding on for dear life. Because, we're seeing again a marketplace that has overran itself based upon nothing that really that the citizens did or called. It was just more the government, right? It's the saying goes, when the governments get themselves, wrapped into, civilian affairs more than needing, then there's always going to be a problem, right? There's always going to be a problem, right? Because I mean, they don't have a really true, I would say a true post or litmus test to really see what real Americans go through, right? They just sit high, look low, and make all these assessments or assertions that no, but Americans are flush with cash. What Americans? Like people swiping cards, bro. People borrowing. People, again, we just literally start having some favorable data on on jobless claims, right? They've been kind of going down lately, but these are people who are returning back to work. These are not new jobs that are being created. People are going back out of necessity now, right? Their bills are piled up already. Make sense? It's not rocket science, but somehow Washington can't seem to realize this. So again, what they said, well, what does that got to do with what we talking about today, dear brother Africa? What is it? We just finna go in on the government all the time. The government, yes, we're gonna do both. Because you have to tie this into your outlook, your money, your money assessment in terms of how you're looking at investments, in terms of what stocks, what sector, where are the bottom fishing moments, what bottom fishing moments produce the best opportunity going forward, or are we still on the sidelines just kind of waiting to all the noise, get kind of somewhat, silenced or deadened, right? That's how you have to look at this stuff, because a lot of people are just too giddy, right? I gotta buy. Oh, I just gotta buy. Make sense? And then what happens is they start buying. Oh, we back, man. I think we good. And then what? They get flushed on. Right? Just looking at Walmart here. I mean, that is horrible, right? I mean, look at this here, right? I mean, this is a good channel now. This was a good bearish, a good bullish flag here, going into their earnings here. I mean, but even just terms of looking at this linear regression band here on the weekly chart into the earnings print, right? If you look at this and say, well, man, this is ugly. Into the earnings print, we was already at the top of the band. The first thing you say to yourself, okay, well, can we go higher? Obviously. But then when we got to that point, obviously we had an ugly ominous sign up there with that doji reversal signal there. And we start kind of pulling back into the earnings, right? We got up as high as like 160, and then literally, kind of coming into the earnings week, right? We had got down, at least to the point about 150. So we, around about $10, right? But Walmart not necessarily a really big mover, right? On average, right? It's just pretty clean, decent beta stock that moves, very meticulous, I should say, right? Because
it's kind of like Coca-Cola. Yeah, they move like
right.
Yeah, they ATR, they true range is really not that big. It's small.
It may about $3-4 if that.
Yeah,
right?
yeah.
And this is the stock that's sitting at around about $1.50, right? $1.50 a share, right? 150 days. So, aggregate value, you say $1.30, $1.50. But nonetheless, the pullback that it got from its earnings, that's the ominous thing that we have to look at, right? Because you say, well, if it really don't move that much on that, like that on average, why would it dump so demonstratively, knowing that it is a stock that has a revolving door of business, unlike a lot of business who was struggling to get clients. Make sense? Walmart does not have that problem. The problem is what? What is the Walmart's problem? If anybody want to chime in on that, what is Walmart's problem? Anybody?
Well, they got really they supply chain. They got supply chain issues, and then trying to pass that cost stuff to the consumers.
Right. So supply chain issues, right? Which is a big major throwing it a lot of business aside, right? On software and hardware. You said, well, how software got supply chain issues? Apparently, there's a domino effect. Like we say, it's a dime holding up a dollar. If another aspect of their business that is needed, even to make a software business have fluidity of function, if they caught up in the meat grinder, guess what? Then they got to use that same excuse too. Well, we got supply chain issues because some of our downline, business partners, they're caught up, and not being able to get what they need to help our business in terms of being able to produce the software service or backing up our mainframes or whatever it could be. Make sense? That componentry between products and services are somewhat symbiotic, more than we would think, right? So, no one is spared just because they may be more centered towards software as opposed to hardware, which really sucks if you can't manufacture, a raw good into a product or fashion it to it. Then somewhere down the line, it may be something that also can mess up that software side too. And we seen that with some of their earning plays. They're getting hit too, right? These pure play software players, they're getting hit too. Ain't nobody spared. I mean, Snowflake the other day, right?
Same thing. Yep.
See what I'm saying? So you got supply chain issue. Then you said what? Cost, right? Not okay.
Yeah. They also having to pay more for delivery. Diesel, their gas.
Gotcha. Right. So you got fuel consumption, right? So that gas tax, right? We call it the gas tax, right? In this case, it's diesel, and diesel is very expensive, right? Right. As opposed to just regular, motor type gas scenario. So that's a gas tax, right? So you got a lot of things happening here with Walmart, right? And of course, some of these carry more weight than others, but nonetheless, in concerto together, that and all together, these are massive problems, right? Right? These are massive problems for a stock that should be benefiting in this environment. Why do we know that? Because when COVID hit and we all went into lockdown, and some of these companies became deemed essentials, and essentials only, meaning the government was only going to allow even certain businesses to be open to make money during that time. Guess who was one of them? Clearly Walmart, right?
Yep. Consumer staple.
Them staples, right? Those staple goods, the ubiquitous items that people got to have to function. If they're going to be locking people in the house and like in prison, at least allow them to have stuff, that they can get from the grocery store, Walmart, whatever, right? So the business model is tested for what? It's stress tested for survival, need for value, right? Yet and still, in an inflationary environment, what you would think would have a correlation to a quarantine pandemic scenario, apparently it's not the same. Why? Because one of them is it's a stark comparison. Why? Because one of them is based upon what? Okay, we got product, right? We're in the very beginning stages of what a lockdown, so we still got a lot of what supply. There's no really big issue on that side, right? We just need the customers, right? We need to be able to kind of handle that, aspect of the customer base, right? Meeting their needs. On the other side of that is what? Now we have what? Lack of what? Lack of supply, right? We don't have ample production to equate that of what people need. So that obviously causes what? Scarcity, right? If there's scarcity, that means the people who even let the wholesaler who even letting go of what they already have, they got to get what? More, right? They got to get more for that
money.
What?
Yeah,
More money for those what they have, right? It becomes a bidder's market, right?
That scarcity create more need and demand for it. But if you ain't got enough, it's gonna cost more.
Right, which comes to the beckon with the ideal of what we say, what kind of inflation are we dealing with now, right? Is it demand, what they say, demand pull, or is was it push, what is it? Was it push inflation or demand inflation, right? So really quick, let's go sidebar that real quick. And let's go supply it. Let's go look that up. Demand pull inflation.
That's right? That Milton Friedman.
Right. So we love going into that. So we go deep, right? Y'all know how we roll over here. Y'all already know how we get there, right? Right. Y'all already know what it is, right? Because we need to become more centric in terms of, as we like to be scholars when it comes to historical stuff, right? We also want to be scholars when it comes to the financial literacy side of things, right? It's better to have a historical context so you can operate better. Hence, that's why we go into stuff like the Keynesian and the Austrian School of Law and all this stuff like that. And we do, things to dealing with the central banks and the monetary system and just, all these things matter because it gives you a bigger field of information that you can now work with, right? To make better assessments of what the economy look like on a global level and also a local level. Make sense? So we don't run from this stuff, right? They say you want to hide something from somebody, hide in the book. Well, guess what? We welcome it. We run to it, right? Over here, we run to it over here. Because we want to have a good scope of what all this stuff means. So when we say demand pull inflation, right? This is important, right? Because we're dealing with two types in this country, right? It's either cost push or demand pull. Now, under the perspective of what we're dealing with now, for all the inflation that the feds are dealing with or that they created, what kind of inflation are we dealing with, guys? Are we dealing with cost push or are we dealing with demand pull inflation? Anybody want to take a stab at that? You don't have to be necessarily right, because we learning, right? So, but what do y'all think we dealing with right now? Demand pull or cost push inflation?
I think demand pull.
Right. So we got demand. So Obashan say demand pull. Anybody else want to jump in there? Is it cost push or is it demand pull inflation that we're dealing with? Anybody else want to jump in there and try to take a stab at that? What do you guys think?
It's demand pull.
All right. So we got two demand pulls. All right. Two demand pulls. Anybody else? Anybody think we got a cost push?
Okay. So stagflation.
All right. So we got two demand pulls, no cost. Anybody got a cost push? Anybody think it's a cost push inflation? Anybody want to take a stab? And anybody
it's got to be demand push.
So demand push.
Yeah.
Okay. So another demand pull, right? So we got three demand pulls, right? And so just kind of thinking about that, right? So think about demand pull. Just using those words, right? The value of that, right? Demand pull inflation, right? See, you got a root and then you got a what? The post or in this case, even though we know those not work, they're not based in terms of one grammatical word, but they two operative values, working in tandem to give you an assessment of what kind of inflation we're dealing with here, right? If we're talking about supply chain issues, like Chris was speaking to, that means there's a what kind of problem? There's a demand problem, right? If we're dealing with supply chain issue, there's a demand problem, right? There's less what? There's less what? Productivity. Make sense? Less production, basically, right? So if it's less production, that means that's going to be what? A strain on what?
Sales.
On sales, right? Or and in most cases as well, right? right? Well, in this case, this sale, I'm putting like a sale, right? But sale, right? And also that's a problem when it comes to what? The consumer, right?
Yeah.
Right? On the back end of that, right? Of course, we're gonna get into that. So less production, obviously there's a what? Demand problem, right? As the saying goes, right? There's demand and there's what? Right? There's where there's demand and there's what?
Supply.
Supply, right? So lack of supply obviously increases the what? Demand, right? So which obviously in most cases, what are the reasons that there's less supply? In this case, we know what it is, less production, right? Now, if those things are the case, that means there's demand. So if there's demand, that means somebody got some what? Some money, right? Or some aspect of it. But what good is having money if you can't what? Utilize it to get what you need because there's less what? Less product, less supply, right?
Right.
So now that means you have a lot of money chasing what?
Too few goods.
Too few goods. So that means money is greater than, that's the greater than symbol there. So, you know, even though it's ratchet, there's ratchet looking a little bit there. But that's a greater than symbol there, right? Chasing too few goods, right? That's a problem. Why? Because now whoever got what? The power in this case, who got the juice, right? Y'all remember the juice with Tupac, right? With that all-star can. Right, you got the juice now, bro. Right, like yeah, like Omar was like, look, man, look, I'm straight. I don't even want that, bro. Bishop might be high around the corner, boy. Bishop might come back, right? It goes to Bishop, come back around the corner, boy. Boy, hey,
Bishop, boy.
Yeah, he was something, wasn't it? So if you think about it, you know, literally, those who own what got the product, you know, the ability to manufacture, they're Bishop, right? They get to get, you know, they're holding down the block. They get to, you know, call the shot essentially, right? So too feel good. So everybody else that's stuck, meaning the consumer, they're stuck holding the what? The inflationary bag. So that means too many dollars chase too feel goods, and the dollars is not necessarily slated in terms of consumers, is because they got what? Forced into this bad marriage. Think about that. Who caused the consumer to be in this situation?
Feds.
Clearly, right? Anybody dispute that? Anybody not sure about that, right? Why did the Fed cause it? How did the Fed cause it?
Too much money printing.
Money printing. Excessive money printing, right? Well, what does that really detail into, right? So when they say, well, excessive money printing, how can you go figure out what is our monetary, our money, I should say it this way. What would our money supply look like? If we talking about there's over saturation of money supply, which is odd to say that, right? Over saturation of money supply. Well, where could you go to find out that data? Or what would that be underneath? Would that be, I just hint, which one, would that be M1 or M2?
Wouldn't that be M2?
Yeah, that would be M2.
Right, exactly. M2 money supply, right? M2 money supply gives you a pretty much a what? A readout in terms of how much money out there circulate. If that money has no place to go because they've printed more than what the equilibrium between demand and supply is rated for, that means that's gonna cause people who produce goods, even if they got the supply to produce, that's gonna cause them to slow down their production.
Yeah.
Because now they can get top dollar for less production.
Right.
But we know it's more than that too, because we know there's a supply chain issue. There's, you know, the commodity markets is haywire right now too, right? So it's a mixture of both. So they can play the game of, again, Bishop. They got all the juice, but they got all the leverage, right? So when you take that into consideration, if we're talking about, okay, if we're in a demand pull inflationary environment, guys, you got to ask yourself this question here, because this is the worst type of inflation. Now, we haven't looked at cost push yet, but we will. But demand pull is the worst type of inflation that you can have. Think about that, because this one here is stoked in at some point. You know, if you got all this need to want to buy stuff, or you got money, if you, in most cases, it ain't like that we got, just the Fed got this imaginary, you know, energy that there's so much money circulating, like consumers are flush with cash. That's a lie. Consumers are flush with what? Credit right now.
Yeah,
they just went back to work. Now all of a sudden, how they got all this money all of a sudden? Me finna tell me a little dusty little $14 check was enough to carry people who were making, you know, tons of money. So, think about that.
Let me take you on.
So they been ate up, right?
Yeah.
That credit, wiping credit cards, all that leads to is defaulting.
Exactly. So now we talk about, again, the same thing we've been talking about literally since the summer of 2020, right? Now we back into the what?
Subprime lending.
Right? We in that bubble, right? This is the bubble. This is the what the great Jeremy Grantham and all those have been talking about this stuff, and Rick Rule and many others, right? Been talking about this stuff, right? When the consumer is being propped up by the talking heads, the analysts, the Harvards likes, right? These guys who get out there and talk, oh, the consumers are loaded with cash. Stop. Consumers were loaded with a $1,200, $1,400 check from the government. Are you kidding me? Right? Are you kidding? Where do you live, bro? Do you live on Mars and just fly down to America, to the Earth every day and go back to Mars? Because you can't be living in the same planet we do. Talking about we flush with cash and we got this, that, the third, and consumer. Yeah, granted, there's certain parts of the society that does have that, right? But it's not, again, not a true measure of what the fold is, right? If you just say, if you petition American turn, let's say we got 365 million people. If you petition us from what, if you want to use this hateful aspect of, low class, middle class, and higher class, well, we already know out the gate, low income people are literally what, one bad, financial, situation from going what, literally under, right? They one bad financial emergency from going under. Middle class would be at least around about what, at most in this environment, I would give them at best maybe what, 3, right? Three bad financial moments from going what, right? From going under, right? They can only weather so much, right? Because at least they have what? Credit. Low income people don't have what? Credit, right? You see what I'm saying? This ain't hard to figure out. We know what's going on here. It's a hustle. Well, we know American hustle anyway, but you think about that, right? Three bad situations. If you're on the top echelon of that, right? Well-to-do or on we'll just say, high class or whatever. Well, guess what? You can weather at least minimum 6 bad situations. But their bad situations are not like our bad situations. When you say like middle class or people who kind of somewhat middle class and a little bit, they got a little something. Because what? Right. How the saying goes, more money, what?
More problems.
More high class problems. Right? You got big money problems, bro. Again, I ain't never seen a person pull up at the gas station in the Bugatti claiming that he can only get what, $20 worth of petrol. Right? But I can only put 20 in the Bugatti, boy. And that cat, we ain't no gas in that car. You put that thing in there and hit that gas thing, click, ain't no gas in that car, ain't no gas in that car. You put nothing in there. Man. But gas already hit the across the head. He coming up talking about putting $20 in the Bugatti. Boy, you gonna get out of here.
And then try to
run that joke off the block. But get out of there. You flex.
Trying to put regular in there, man. I'm gonna put regular in this, man.
You know what I'm saying? Transmission would be on the ground. But that's you can't even spit out the gas station. You left the transmission that cheap gas. But you think about that. So they can weather bigger storm because their problems are more based upon what? In terms of the assets they already have, right? Those are bigger base assets, right? They might got to lose a house or investment property or two. You know what I'm saying? But they still got 2, 3 more. You know what I'm saying? Or, whatever. You get my point. You guys get the point. So in their relation or their value of looking at demand pull, for them, that's why places where they shop as opposed to people where low income people shop, right? Again, case in point, people in the low income spectrum, they're shopping where?
Dollar Tree.
See what I'm saying? Walmart, Dollar Tree, Dollar General. And again, you would say again, just based upon what we was kind of putting into the energy, that these people or these businesses should bode well though, right? You would think, right? But sometimes you ever had, there's another bad problem too. Sometimes again, having what? Too much what? Think about this for a moment. Sometimes there's a problem with having too much skew. Right? What is too much skew?
Too much inventory?
In the case of what? How if you can't move the plethora of that, if you're only just selling groceries and you got what in the store? You got electronics, you got what? Y'all see where I'm going with this? You got a couple of tractors maybe in the back, like y'all selling tractors too? Where'd that come from, bro?
They're trying to eat. They don't care about
right.
It's even worse when you got a grocery store.
Think about it.
Because you got expired products that you have to push out.
Yep. That's
Right,
why they be putting everything on discount too, trying to get it up out of there.
Yep.
Think about that. The when them people sending you inventory for their electronics, they want their stuff to move. If it's sitting on your shelf, that's costing them money. Which consequently costs that store money to house it. Right? That trucker had to bring that stuff in on high fuel costs, on the back of that 18-wheeler, unload it, and put it up in your way. It's on you now, bro. This your problem. I'm out. You see what I'm saying? They moving these kind of items like that up in no Walmart, bro. Anybody going there buying 16-inch screen TVs, bro? Not in no Walmart. Unless y'all know something I don't know.
Nah, I'm trying to buy some food.
They getting them groceries, right?
Yeah.
Giving them groceries that, bro.
Need something to eat.
See what I'm saying? So now y'all see how this stuff is materialized. Now we can see
Value meal.
what's going on for what happened with this move right here. See, it's not so much an anomaly. Make sense? It's not so much an anomaly why Walmart would have that kind of level of miss or pullback based upon their guidance. See, this is more about the guidance, right? Going forward, bro. They ain't buying all that electronic stuff, bro, like that. They getting essentials on the groceries. They're in survival mode. They loading up on toilet paper again, like it's COVID all over again, right? They just trying to get that cheap price.
Monkeypox.
Right? You know what I'm saying? Now you got the monkeypox, right? Boy, that's enough conversation of the day. Woo, we got to go in on that one though.
Yeah.
But think about it. So if that business is a 2-for business, it's a 2-for-1 business, right? It's consumer discretionary and grocery on top. Then the discretionary items on that side of the house is lacking. Like that's like the people that work in that side of the on Walmart, they probably ain't getting they probably like happy because look, they ain't getting no interaction with customers. The people on the grocery side, they grinding, boy. Like, boy, they coming through here getting these cheap, great value ice cream and cereal, boy. They working me over here. But think about it. But also on top of that, what did Walmart have to do? Just like everybody else was doing, literally doing Q3 and Q4 2021. Remember, we had this big wage increase, revolution. You got to pay us more, right?
Wage inflation.
They start demanding, right? What happened with Amazon up there in New York? Them jokers took it to them when that unit.
Staten Island.
That was Stanton. See, think about that. So we had the wage increase. So that's if you got to pay workers more, and you still have if you have any value or decrease in sales, what's going to happen? You see how this stuff is not rocket science. So information as opposed to what we're doing as investors and traders, how we look for value, right? Because we're being trained to look for value, right? We want the best bang for our buck. We want to buy low, sell sell high. If we just put the front of the business, the C-suite on blast, in this case, what we're looking at the financial, we're looking at the fundamentals of a company, how they're running their business, what are the things that are factoring that, affects that business model, then how, if we are also consumers as well as, board members, but we also consumers too, we already know what's going on with the game, right? You would have to say, well, if this company's situation has gotten better, we see that they're softening or it's getting better, then we should be comfortable in doing buying the deal, right? Or in this case, bottom fishing, right? But we just did a deep dive of bottom fishing value on the C-suite, right? The C-suite still ain't what it's supposed to be. The numbers are not right. The issues are not abating as we would think they should be based upon all this the euphoria that's coming out of Wall Street, right? Or I should say it this way, all this constant optimism, right? That can be a problem in itself. Like you can't just, we ain't just talking doom and gloom all day, every day, granted, but we dang sure ain't sitting here finna lie to ourselves and tell us that things are not what they are. Wall Street has the bad propensity of lying to people and telling them that things are not what they are, what they truly are. Why? Because as the saying goes, I was born at night, but not not last night, right? But there's a lot of traders out there that walk around with their head in the air or their head in the sand, with crayon stuck up their nose, drinking on a bottle of Elmer's glue, with a football helmet on turned sideways, And they act like they ain't got no common sense, no brain cells that they can rub together and figure this stuff out because it is not rocket science. Make sense? I mean, what did we go through to come up with this conversation that we're having today? Did we go through any kind of deep financial reports right now? Have we gone to anybody's website to look at their financial reports?
No.
We pushing through the internet, just pulling up, stuff, just basic stuff that anybody can just Google. And then we using the collective of think tanking to figure out, okay, what's the situation that we're dealing with here, right? We're getting, of course, we're getting more valued information to work with now because we're as investors and traders, we're looking into this, and broadening our lexicon, right? Our vocab and terminology values in terms of how Wall Street operates. Because we talk about now inflation. Well, we know that there's two main inflation, right? There's demand what? There's demand pull, and then there's what? Cost push. And these are things that's kicking everybody in the teeth right now, not just in America, but globally. Globally, then how can we take the approach that we're in the all clear on our side? And y'all know, well as I know, I was talking to somebody today while I was in the hair, at the hair salon, getting my little hair done, because I'm always going in, they love when I come up in there because they know they're finna get it, boy. They can't wait. We're gonna talk about everything, business, everything except trivia stuff, right? When I come there, trivia stuff, they just cut all the trivia stuff out. And like, yeah, so what's going on in the market, really? What's going on with it? They just get going in and we get having a good old conversation. Because the goal is that we need to be more catering towards what? Invoking more critical thought, right? Critical thinking that really affects our lives. Make sense? At the bulk of the conversation is guilt around a lot of stuff that ain't really gonna help your situation, then yeah, you can't hide yourself in enough trivial things to make your situation get any better, by acting like it don't exist, right? Let's talk about it, right? Let's have those conversations. Because at some point within doing so, somebody can use that information, so I'm saying, to their benefit. They can start making better conscious decisions, right? I can only imagine the level. I keep saying this, the amount of money I blew, coming out of my, teens in the 20s, and I'll pay to get a portion of that money back now, right? In terms of what I could have been doing with that during that time. Makes sense? The decisions I made, the bad decisions I made, and just ripping through life like it's just like no care in the world, right? But then that's just my story. Everybody have their own story. We always look back in hindsight and say, man, I wish I would have done this different, right? I wish I would have met this person at this time in my life. I wish I had not met that person because my life probably be different. You see what I'm saying? We all have those kind of different things we're working through. But guess what? In the here and the now, our ability to the bottom fish have gotten that much more better now. Why? Because we got better what? We got better bait, right? We got better equipment. We got better knowledge. Make sense? We know how the system is set up, right? We know what the lake is set up. We know the structure, right? We know what's underwater. The things that we can't see, we're privy to those things now. Make sense? The average person that you talk to in Main Street about investing and trading, they look at you like you what? You talking a foreign language, bro. I don't know what you're talking about, bro. Get out of there with all that, bro. What happened to the Lakers last night, though? They go back to stuff that, like, man, nobody want to talk about the Lakers right now. Come on, guy, bro. We try to talk money. So you see what I'm talking about, right? But we're breaking those molds, right? So we understand how this thing is set up, right? So demand pull inflation, again, is the worst of all of them. So let's jump into this real quick, right? Again, we're not going to be on super long tonight because, it's already late. Thank y'all for being patient with your brother anyway. I'm trying to get it in. We're going to get it in. So what is demand pull inflation? Anybody want to read this first little paragraph right here? What is demand pull inflation? Anybody can read that for me real quick. Anybody?
Says demand pull inflation is the upward pressure on prices that follows a shortage of supply or in supply, a condition that economists describe as too many dollars chasing too few goods.
Can you read that again for me? Over. What that last little part right there? What is that again? Too many what?
Too many dollars chasing too few goods.
Now I know y'all investors and traders and stuff like that. Y'all got it. But how many y'all people that's out there that have no clue about this stuff? Where are the dollars at? Are they talking like they got them big bank rolls like they had before the COVID? they got them big bank rolls like T.I. be talking about with them big bank rolls, bro. Like, bro, man, even the crack dealers out there like, bro, look, it's hard out here, bro. Look, I got a couple pebbles and I got a bottle of low. I got you. I got a carton of eggs over there too, bro.
They got the money. They traveling and spending here and there. They got the money over somewhere. I don't know what money it is. Maybe it's them credit, credit card.
You know what I mean? It's what? Up and down, up and down, up and down, right?
Swipe.
Right? They swipe it like away. But those who even got cash, right? The cash, holders out there, again, they're having to pay what? Higher what? Cost. So that means that chips away at that what? All that stashed away cash now ain't so much, it ain't so stashed any longer. It's not like, bro, I got inflation dollars right now, bro. It's so crazy. I gotta show y'all this here. But we're gonna keep talking about it. So again, $2 million chasing two fear goods, right? Who causes or what causes a scenario where there's $2 million chasing two fear goods? Again, is everybody around America just flush with cash? That's the question, right? I mean, is everybody just sitting around here flush with cash?
Absolutely not.
Apparently not, right? Because again, it will read that, or in terms of that value of really the true strength of the nature of the consumer, right? Beyond that of what the Cook numbers are saying, right? Because we know people just literally went back to work. Literally just went back to work. So how of a sudden, how they get all this cash? And you're gonna try to convince me that it's because of what? A $1,400 stimmy check or $1,200 stimmy check? And keep in mind, we was on lockdown for how many months? You couldn't make this stuff up. You see what I'm saying? It doesn't add up, is my point, right? And if it doesn't add up, then how can we act as if it doesn't exist, right? Meaning the problem, right? That we know to be true. So man, look, this is crazy. I gotta show y'all this here. Dang, I didn't get the whole thing, did I? Or did I? I gotta show y'all this here. This is the sidebar here. So give me 1 second here. This one is what they call it's real in the field, right? It gets real in the field when even certain sectors of society are having problems. But what do I mean by that, right? Because we know, because we think about Uber, right? Uber is a part of what? The gig economy, right? What are they starting to do right now? They're starting to slow what? Slow hiring.
Yep, layoffs and
they start. Here it comes. The layoffs are coming now, right? We talked about this, right? When the layoffs start happening, you can almost but guarantee is what we finna hit what? Stagflation. Robbers laying people off, right? It's coming, right? Fake Snapchat.
Same thing. Lyft. Same thing.
You gotta cut back. Facebook just came out and said the same thing. We gotta what? Start scaling back. We gotta start laying. If these people, these mega, again, well-to-do so-called businesses can't even function like this now, what does that say about everybody else? Like as this ain't goes, when they catch a cold, what everybody else catch the flu. So where all these consumers with all this money at? That's what I'm just asking. Where all these people that got all this dough, this cash, right? The blow and everything back to what? Back to the norm. You see what I'm saying? You can't have it both ways, right? They will have you to believe that it's that way, but it isn't, unless y'all know some I don't, right? Because demand pull inflation is real. It is real in the field, right? So we can't act like these things don't exist just because Wall Street needs some kind of form of a favorable data to get investors all excited about what? Getting back to some kind of form of a norm. You see what I'm saying? It's disingenuous at best. It's very disingenuous at best. But you guys know different. Why? Because you're not like the average person, right? You're doing something that puts you in the place or in the business of what? Conducting business under reality, right? Of knowing how goods and services work, how supply and demand work, how the global markets function, how money supplies it is doled out, right? From these central bankers. Make sense? You can track things better when you have better understanding of how things work. Make sense? You're not confused about it. So guess what? If the gig economy itself is struggling, think about all the jobs that are gig-based economies, right? If they are struggling, imagine what the corporate value is looking like. Make sense? Because gig economies are based upon what? People having access to be able to use these different, these gig scenarios, right? To function within their corporate setting, right? If you come back on using an Uber and stuff like that, or just, getting your hair cut regularly when you probably used to, get it done, whatever, every 2, 3, 4 days. Now you getting it, once every 2, 3 weeks. That's a sign on what people have as far as what indiscriminate cash, or we call what miscellaneous funds. Make sense? And I know our sister Monica can speak to that because she speaks about this stuff religiously, right? On terms of how to budget better, how to find cash flow, right? How to plan to have excess, or again, help, have a better budget than plan. Make sense? Now, here's something that's crazy. Look at here, guys. It's bad, guys. And this is, as much as this is a joke that I'm going to show y'all, it is real in the field in the same breath. It is bad, guys, when these workers are struggling right now.
Yeah.
I'm just gonna put that right there. She the real deal. This ain't no meme. This is the real deal. See them likes down there? You see them tweet? That's the real deal. And if you go to the actual her page, you'll see all those people that work in that gig economy. They just start chiming in. People, all type of them. They like, yeah, I'm been seeing softness on. We've been seeing softness in our, bruh. They got inflation even in the strip club, bruh.
they can't spend no more for a dance.
Birdman, them ain't coming in there making it rain. Where Florida them at, bro? where futures them at, man? Where them jokers at? Where them jokers somewhere like, look here, about that.
Yeah, about that.
Yeah.
But about that, yeah. But see, yeah. I'm gonna have to be a little bit more, a little bit more conservative now. I could throw you, maybe I can go down to Walmart, get some green dot cards. I just throw a couple green dots. Maybe I can't do that other stuff. They throw a green dot, brother. They got the budget what they can throw. That means when they throw that, they know what they spending. That's really the feel. True story. They're part of the gig economy.
Yeah, that's tough.
Because again, you're talking about some of these clubs are very high class. Let's be honest. Their clients are investment bankers. You know what I'm saying? People who hedge funds, people who got businesses, they got that excess of cash, right? If them jokers ain't going up in there, are you kidding me? Broke jokers don't go to the strip club. Let's keep it 100. Even if we talking about the most bottom ring ones, you can get 1 or 2 guys sliding there, but you ain't going in there throwing no IOUs up on the stage, bro.
Facts.
Let's be honest. And some people look at that like, man, that's crazy, but it's real because people don't have discriminate cash like that. Indiscriminate value, so to speak, excuse me. People are being conservative. So you got to look at this stuff and be like, well, okay, well, if the gig economy and they starting to lay people out again, Uber, Lyft, right? All these companies are going through that right now, that softness of hiring. They're being very selective in terms of who they hire. But they tell y'all that we going back to full economy, full employment, all this stuff. But people who going literally back to work, not not creating new jobs, they're going back to work. What are the jobs that they're going back to? We keep looking at the BLS, the Bureau of Labor Statistics. We see the jobs that people are going to. They're going back to more what? These are the bulk of the jobs.
Service right? Industry.
Right.
Service and hospitality. The economy is strong, though. Economy is strong, Consumer is strong. That's why that little clip, I know the Maverick had posted about when Walmart and Target had their earnings, and the CEO of Walmart said that they can tell that the consumer behavior is changing. And there's also another little video I sent you. I think you know about it. What's his name? Rickards.
Yep, Jim Rickards. Yep, Jim Rickards, old school. I haven't yet even shown some of his stuff. I got some of his old archive stuff.
Yeah,
he old school.
Right, and he talk about the consumer behavior. It just lets you know how the economy is by the consumer's behavior. Watch how the consumer behaves in a market, an economy that is slowing down. That tells all.
Exactly. They can put out any indicator they want. They can cook the book as much as they can. You cannot put a facade over exactly what consumers are spending on. It's going to show, right? And it's a difference. It's a reason why companies like Williams Sonoma, as opposed to a Ross, right? A Ross store. Again, two different type of clients. And one of them is 100% pure play on what? Discount shopping. You would think that one there will bode well, what? In a what? High inflationary environment, right? They already got discounted items, right? Make sense? But not the case. We just talked about it. Why? Because what? Low income shoppers have to be very selective. They can only weather maybe one bad at best, one bad financial storm, and they out of there. They out of there. Middle class can weather maybe 3 or 4, maybe 3 or 4, right? Upper class, they can weather 6 or 7, but guess what? Even their storms are not a torrential rain. They can weather more like hurricanes, right? Right? They got more money. That means they got bigger problems, right? They got different set of problems than low income and middle class people do. It makes sense. It's not hard to realize that. So it's the reason why they can shop at a store like Williams Sonoma, Pottery Barn, all this stuff like that, and keep them afloat during moments like that, because this is where they shop on average. Or these would be more or less rated some of the discount shopping that they go to. Ain't that something? Right? They going up in Nordstrom's, bro. Nordstrom's had earnings of the day. Everybody and mama thought Nordstrom was gonna miss. Why? Because we high dollar items. Anybody going for those Nordstrom, bro? I beg to disagree.
Beg to differ, yeah. I see them at the mall.
Shoppers, think about that. They kept Nordstrom afloat. They beat on EPS and earnings and guided higher. Now I don't know if that guidance is true or not. I'm skeptical on that guidance. You ain't gonna convince me of that, right? But nonetheless, the stock rocketed.
Yep.
Nordstrom. Think about that. Williams Sonoma, Macy's, right? But Ross tanked. Think about that. Who else just tanked? Ross tanked. Who else?
Kohl's tanked.
Kohl's. Like, see, that's the ones in the middle, right? That's the ones right in that middle. Kohl's tanked, right? Couldn't make this up of all of them too, right? Because those, you think, obviously Kohl's supposed to be better than Ross, but still, they kind of right in that middle value, right? And then you got those, and then you got the lower tier, right? The lower tier gonna be who, right? Right? Think about it. Matter of fact, Big Lots got earnings tomorrow. I'm looking at that. Gonna be interesting watching that one, right? Big Lots got the same stuff we talked about like with Walmart, but even more or less they got a little bit of mix of everything in Big Lots. But that's what we want. They have to keep out on Big Lots in the morning. I just say that. But on the lower total pole, even besides consumer discretionary like clothing and stuff, then you got this pure plays in terms of Dollar General, and then Dollar Tree. Now that's just straight lower tier.
It's not $1 anymore. It's like $1.25, $1.20.
Yeah,
right. They actually passed that cost on to their consumers. Right. I remember when it happened. It was just like yesterday. Okay, if they able to, remember we kept making jokes about, man, look, I know y'all used to get these dozen of eggs for $1, but man, we're gonna be $1.25 now, man. Man, you mean $1.25 now for a dozen eggs, bro? Come on, bro. Porter, man, give me one egg outside the carton for $0.25, bro. Come on, give me one egg for $0.25. It's that kind of scenario. But they can weather it. Why? Because what are they in relation to Walmart? Why would Dollar Tree beat on their earnings as opposed to Walmart? I'm asking for a friend.
Because Dollar Tree will have a lower ceiling, I would think.
Based upon what though? What's inside of their ceiling that would cause that?
I mean, their prices really, yeah. And they don't really have. They don't have a big responsibility when it comes to their products like Walmart does.
Could you elaborate on that? You go in there, you warm, you hot, you ran on it too. Y'all on it, y'all on the right track.
I would say they don't have the inventory that Walmart does. So
okay, now you get hot. Now you get hot. Okay,
like
what are those
TVs.
Type of inventories? There you go. They don't have what?
Yeah,
they don't have like electronic products and stuff like that.
Operative word, big discretionary what?
Items.
That means they're more what? They're more of what? A pure play. They're 100% pure play on what? On groceries,
Everyday items.
and everyday items, right?
Yeah,
more ubiquitous based items, right? Ubiquitous based items, right? Toilet paper, maybe a screwdriver you need, a cheap one, right? To turn a wrench or something, right? You see what I'm saying? That ain't rocket science, right? Everyday ubiquitous type item. So low, low value of having what? You don't have to worry about having what? Excessive what? When we talked about this little acronym earlier, right? You have to have what? You have a what? Low ratio of what?
Skew.
Of skew
Yeah.
in your store. Meaning your supplies, ain't really what? Huff and pay. They hurting right now, but they ain't really just sucking like it is like what Walmart man be dealing with terms of what Samsung, calling their phone every 2 seconds. Man, y'all move some TVs today. Y'all ain't move no TVs today. We just sent y'all a whole truckload. But you mean y'all ain't moved no TVs today? Look at that's just like what buddy name on New Jack City? What the Snipe character? What was his name?
Talking about what's his name?
It's on the tip of y'all tongue too. What
with
was
an N, man.
yeah, you ought to do it. What was his name on New Jack City?
I forgot
What's the
it,
Snipe
man.
character?
We all we got.
Right? Y'all already know it. It's what I'm gonna go and take Nino who?
Yeah, Nino Brown.
Nino Brown.
Yeah.
Boy, y'all better come through, right? But y'all ain't moving them packs today, bro. Y'all ain't moving no packs today.
Yeah.
Think about it. It's rough out there, bro. You got these suppliers shaking down these retail like dealers. Think about that. Everybody's strapped for cash. It don't seem like that when you listen to CNBC, Bloomberg, right? Yahoo Finance, Fox Business News, right? Newsy, whatever these publications that are speaking this stuff all day, every day, kind of preaching this optimistic rhetoric, and not that we have to again play the game of doom and gloom, but at least over here we're gonna be on the right side of information. We'll let markets remain delusional. We get that. That don't necessarily mean that we're not going to trend trade. We ain't ignorant too, right? Because we know there's levels to this. But ultimately, our grand perspective is that we know there's still more problems in the pipeline. Until those things really work themselves out, are we going to be bottom fishing the market like there's no tomorrow right now? I'm asking for a friend. Are we going to be just going out there saying, okay, well, just because Wall Street said the bottom is in, I'm just going to start buying again, these stocks, just because they came down maybe 40, 50, 60%, some of them even 70, I'm just going to start adding money to them. Again, there's some other things that need to get worked through the system for that become reality. It just happened on a lot of these stocks just recently. Well, or I didn't say just stocks, but when you had the likes of, again, Kramer and Tom Lee and all those kind of those chicken doves, right? I'm gonna call them chicken doves. They ain't even, man, them some real shiesty jokers, right? Mm-hmm. They said it way back over here, bro. The bottom is in. And they didn't call it down here at 420. They called it up here around 430 into 440. Oh, the bottom is in. Nobody said that because when we crossed over the 200 moving average, see, they caught up in, I ain't no go in because it's late. I want to go, but I'm not. Soon we cross over the 200 moving average. Oh, the bottom is in. You need to be buying. You need to be, adding to your Apple position here. You need to be adding to Google here, guys. These are great. These are growth stocks. I mean, they're the kings. Look how well they protected you during COVID, knowing we ain't in that environment any longer. So people start buying again. 430, 440, into 450, all the way up to 462. When we knew this was going to hit the top and turn over at 462, because we sat there and called it. And we were telegraphing that thing too with blue and face. All it was a gap fill up there. Soon we gap filled, we out of there. So guess what? They trapped a whole new swath of investors, greedy investors who just can't sit patient, can't sit still. And guess what? Flushed on them. We talking about flushed on them. They got oof. That got hurt. Think about that. All this area right here, those guys right there got mashed up. That were buying that the bottom is in theory based upon Tom Lee, Tony Dwyer. They had them all on CNBC, all that, the typical does they bring on there to kind of the cheerlead behind, the Fed and all that dumb stuff. Of course, Jim Cramer he's just the worst, right? I don't know who worse right now, him or Kathy, right? Kathy Woods, right? Oh. You could make this stuff up, right? They just horrible right now. They're a horrible read on on the economy and on the consumer and on the stock market. But these supposed to be gurus. Long-term guru. They straight sucking wind right now. So you gonna tell me you guys are better than them right now? Apparently. Y'all sure are. Right? I'm gonna say that with the utmost, oomph behind it. Y'all definitely are. Because see, one thing that they fail to realize, like I was saying earlier, with these big money people, these likes of the Harvard likes, and all these people who sit down, sit high and look low, thinking they can put a read on what the true average citizen really goes through. We know there's a big disconnect with government and citizens, obviously, right? Like nobody's dumb like that any longer. We know these people, trash and bad read on what, on character, on a lot of things, right? They live in a fantasy world. Y'all know what was going on. We talked about this stuff over and over. That's why we had these sessions for a reason, right? To bring clarity and what? Sanity to a lot of the what? The insanity, right? Maybe we can operate better when we have a clear conscience about reality and not about what people want us to accept. This is the end result is what? You either gonna what? Lose money or you gonna what? Make some money, right? This stuff is not hard in terms of understanding how the macro picture is what playing out. There is going to be that time when things are going to be right. But if you can say, okay, we just had FOMC the other day. Now, one thing that Wall Street was not pricing it, and they're gonna lie, say that it was, they got hints of it, but they wouldn't really just beating the horn on it like it was like, when they talk about the bottom was in back over here, when they feel like, okay, we got to handle it, we're gonna get 50 bips at the next rate hike, and then the Fed's gonna kind of play into being what? Data dependent, that lie again, right? That old lie again, right? They got the most ratchet talking points. It's not even funny now. Like we already know their hand before they even try to play it. It's the same thing down here. Now, interesting, if you look at this here, just hypothetically here, let me bring this over here and blow it up a little bit. Sorry about that. Look at this here, guys. This is a come. I know this stuff is crazy because we're talking about the art of bottom fishing, right? To be a good dip buyer, you have to be very good at learning how to read a lot of what the minutia of, again, volume, the oscillator value of what curling value, OPEX, short covering, or short interest, all that stuff. You got to play a lot of different factors into figuring out whether or not, their strength really, really, truly coming back into what? A beat down marketplace. That's just on the technical side. We just went through a whole slew of what fundamental stuff, right? With Walmart, all that stuff, right? Even the strippers can't even get nobody in the door right now, right?
That's sad,
bro. I'm talking about, look at everybody just throwing up straight confetti money, right? They just going and getting a whole bunch of fake money, just throwing that, I guess. I don't know, but look at him. This right here looks almost identical to what this right here, does it not? Look at that right there. What that look like, guys?
It does.
Y'all see that there? Do y'all see this right here?
Same correlation going in and then almost the same going out.
Ain't that something? So hypothetically, if we get let's say they are about that life and they bring it. Now we already knew that I had been telegraphing this stuff almost every day. That's why I've been really adamant lately, just trying to say, well, hey guys, look at these levels, right? Because we've been talking about like forever, right? Have we not?
Yeah.
Are these levels, have these levels been hitting though? They've been hitting, all of them. I know it to be true because I'm sitting there watching it too. A lot of y'all trading them. And so it's not like we're behind the curve. We're right on time with the curve and sometimes a little ahead of the curve. Why? Because we're doing what we're supposed to do. We're playing what the market is offering us. We're staying within the confines of what the trend is giving us. The trend is your friend. This is the same thing we saw over here. It's starting to happen over here. Let's say we even get that level of a fool's go rally. Now we just scanned and got news the other day that we're going to get 50 bips over the next 3 months. We didn't get that at on the last FMC. The last one, they just said, well, we're going to give you we're going to do our 50, and then we're going to be data dependent. This time, the minutes came out and said, look, it's all but certain we're going to do 3 50 basis points, right? Hikes. And that's still having to also add in QT. Wall Street was not expecting that third one. They was expecting possibly June, July. They wasn't expecting August. The only thing that tipped them off to make them think that they might have been getting 3, and they weren't really running a lot of publication on that, is because I'm gonna give y'all one guy that kind of dog whistling to Wall Street, but you had to be cryptic to realize what he was doing. The federal governor Bostic, y'all remember from Atlanta, he came out, and remember he was talking, with a lot of these people, they were doing all these conferences and all that.
Yeah,
He hinted that what? That we might need to be what? More what? Reserve come what month? In
September.
terms of, there we go. See, y'all on it. See, just when we the money cracks. He said we might need to pull back or be more reserved during what? The month of what? September. What month is it right now? May. If we already know we had a 50 basis point coming in June, but the Feds also orchestrated under the last FOMC meeting that they're going to do 3, that means that's what? June, July, and what?
August.
So that means after August, going into September, we need to possibly think about doing what? Being reserved or pull back or what? Or at least what? Pause. This is dog whistling to who? Wall Street. Now Wall Street said, okay, at least we have a broader picture all the way to the month of what? February. That gave us some room to what? The hustle with. In their mind, they gave us some room to hustle with. Y'all know how they man, look, y'all know what it is. Think about it. Now, guess what they're doing now? They trying to do everything under the sun. They finna put all their chips in the back, or they're gonna try and say, well, guess what? All we need now is what to work out in our favor. We need what? Russia-Ukraine situation and what? To abate, which is not, right? Which is not, right? And this is the big elephant in the room. We also need what? China to come off with? China needs to come off with?
Over lockdown.
Off lockdown, because they the what? The producers of the planet, the production arm, right? We need, because they feel like if that happens, if China come off lockdown alone, they feel like that'll also what? Aid into possibly what? Helping the supply chain issue. And what else? Inflation. Why? Because China, if they the biggest producers on the planet, that means they need what? Constant what? Constant what?
Right.
Commodities coming in, what? To manufacture goods. So that's why the commodity prices are high, because China ain't what? Accessing them to what? To produce goods and service. So that's why there's a scarcity on what? On aluminum, on wood, all the things that China do, because China is the biggest what? Rare earth mineral what? Collector or controller on the planet. Ain't that something? They control literally what? Or maybe 2/3 of the world's what? Rare earth minerals.
Mm-hmm.
And it's not like it's just in their backyard. They go into other people's land and what? Taking ownership of the land where those minerals are and buying it up. So they can what? Oversee it. They all in South America. They all in, of course, Africa. They all in what? Australia. They all in the what? The Pacific Islands. Like they in those areas what? Getting them resource in the ground. Couldn't make this stuff up. See how that work? So they're trying to, it's ratchet. But y'all get it, right? Is it making sense, guys? This is a connecting dots with y'all.
Yes, sir.
Yes, sir.
Y'all with me here? Are we abandoned brothers and sisters here tonight? Right? Because somebody gonna have to be able to explain this to the people out there what sleep at the wheel. Right? Somebody, going all in on DraftKings and need to be like, look, bro, I know you're trying to get it, but that may not be the way, bro. Come on, right? But whatever the case, you need to be able to explain this stuff to people who are asleep. So they need all these things to work out, right? Because they know China in itself is not. And then on top of that, they also need what? The employment situation to work itself out. But guess what? That scale has already been tipped. The employment scale has been tipped. Why is that? Because what's starting to happen right now? They waited longer than they could afford to. What's happening right now in corporate America? We just talked about it. What happened with Snapchat the other day? What's happening? What's happening in corporate America right now, guys?
Laying off workers.
With the chest, layoffs.
Mm-hmm.
Or what? Slow to hire. Let that marinate for a moment. So they're trying to front run all those things to get risk on in the marketplace to save this over frothy, saturated marketplace. They refuse to what? Lose. So consequently, that means they're doing what? They're doing everything they told bearish traders not to do in the time when the Fed was printing all that money. They told everybody to don't what? What did Warren Buffett came out and said? Remember, matter of fact, they had Warren Buffett come on dang the prime TV. You think on prime TV begging to America to do what? Don't what? Remember, he came out and made that one phrase, right? They coined it the Warren Buffett phrase. They said, what? What did he say? Don't what? I don't know if y'all remember. He said, don't what? Don't bet what? Against who? America.
Oh, yeah. Yes.
Y'all remember that? He said, don't bet against America. And they ran that publication every day, all day, like, man, like it was a rerun of whatever your favorite sitcom is.
And he still did it.
See what I'm saying? Didn't he? Sat on all that cash and didn't bet on nothing. Dirty jerker, dusty joker. Use everybody else's money and greed and, and ignorance. And see, this is what they do though. So basically, Wall Street is telling everybody that right now. What? Don't bet against who?
America.
Now, but America doing everything what? Besides betting on is what? Its citizens.
Mm-hmm.
I ain't making this political, but I got to go there for a moment because it matters. We look at the money. We look at where the money at, bro. If the money going out the back door, where's that money going, guys? Where's the money going that is needed to help the gas and to help the problems that we're dealing with? Where's it going? Y'all can say it with the chest. You got to be scared. Say it with the chest.
Well,
you know where it's going.
Right, 40 billion went to the war.
Ukraine.
It's going where?
Right.
Constant values of it is going to Ukraine. Constant values of it is going to what? Immigrants outside of our nation. Bad dealings that they did with in the past because they messed up and in all the other places like Afghanistan and all this stuff. I mean, you commit this stuff up. The same people that they made enemies, they're not going to them begging for what? For oil. Commit this stuff up. They all in Iran begging for oil, bro. Are you kidding? Iran, like, don't worry about it. Here, hold this yellow cake. I got some uranium for you. I got some nukes for you. Yeah, come on over here. Yeah, I got you. Come on. They just tried to overthrow the president or your president down in Venezuela, Maduro, with a puppet. And ain't that something they had to come right back around, tuck their tail between their leg and beg him for what? For oil. Couldn't make this stuff up. These jokers around here picking fights, making enemies, and how the saying goes, don't be running around here doing what? Burning what?
Burning bridges.
Don't be burning bridges, bro. You know when you're gonna have to what? Cross that thing. Is that not what America doing right now?
All the time.
Nobody want to do business with this foolishness right now. They don't even want our dollar. They're doing business in other people's currencies now for the first time since the gold standard. I ain't making this up. Y'all saying it like I am. Am I lying?
Mm-mm.
Russia then came out and told Europe outright, look, y'all want this natty gas, bro? You want it here? You want it good? I'm gonna need that in rubles, bro. Think about it. Straight gangster, straight Nino Brown them. See how that work? That's why they still scared to put a true embargo on Russian oil. They knew they'd do that, it's game over. They threatened it verbally, but they would not put that embargo on Russian oil. I bet you they won't. See how that work? They're in threatening mode now. And people calling our bluff, meaning America's bluff, and they doing business in everybody else's currency. They're doing business in the actual resource now, how it's supposed to be. The same thing that even Gaddafi was trying to do in Africa when he was trying to bring the African Union together, say, hey, guess what? Guys, I get it. We still got dusty history here in Africa. I know this is, what it is, but we need to start doing business in terms of our resource that we have here, right? So they were trying to bring about remember that golden dinar?
Mm-hmm.
And then what happened to Gaddafi?
Out of
there. Ain't even funny, but y'all know that out of there. Right? Because they know if Africa ever did that, it'll bankrupt the world. Truly, let's be honest. 1,000% it'll bankrupt the world. Because all the other nations is parasitic. They ain't producing that. They just controlling the money supply, the currency. That's what they printing fake money and buying real oil, real gold, real wheat, real aluminum, real iron. Y'all feel me here?
No.
Imagine if y'all had that power, bro. You just go right in your office of your little house. You print you up some dollars, right? Stacks of them. Stacks of them. You travel across the water to Africa. Say, look, I got that guap, bro. I mean, I'm gonna need about 80 barrels of that good sweet crude there. I'm gonna need about 80 bushels a week there. And you better pay for it with that printed money that you just printed literally a day ago. Y'all feel me? Just think about that. This is the extent of what the situation is right now. And even in doing so, we're back to where we were from square one. What is square one?
Too many dollars chasing too few goods.
So how can you have a booming economy and the likes of Apple, Netflix, Google, Tesla, whomever, Walmart, Costco, right? All these companies that depend on all, how can they be given solid guidance as if everything back to norm? If y'all see where I'm going with this? So if we're going to say that we're in a position where we need to be what? Bottom fishing all this, what, despair? I'm just saying, make it make sense. Make it make sense. We're going to need a few more, what? Data points to change that narrative. Right? We've seen this before, is my point. We've been here, as they say, we've been here before, right here. We've been here before. It's the same thing playing out right here. If they even try to push it to what? 4:30, if they even try that, because that's what they're going to probably try. Look, y'all know how this stuff go.
And tomorrow's Friday, too.
Right, we're prepared for it either way. And I'm not saying they're going to try it by tomorrow, but you get what I'm saying? Because it took them days to get it from what? 420 up to 462, right? We're talking about a 40 bit move, you know what I'm saying? And it took them, this on the weekly chart, look here. 1 week, 2 week, 3 week, 4 week, 5 weeks, 6 weeks, 7 week, 8 week, 9 week, 2 months, right? But about 11 weeks, right? That's roughly right, what, 2.5 months, right? So around that, well, give or take, right? Near 2.5 months, right? That puts us around what? If we say, for instance, hypothetically, they try to do that mess today, right? Which they try now, of course, right? They can't even clear 406, right? That's why I said we're gonna close above 406, out of there, right? Keep trying, but yeah, I ain't convinced. Obviously, we're not. We just know how to play the levels, right? We're playing it in the pivots. Let's say it takes them 2.5 months, so that puts us at what? It's already basically what? June, right? We're close enough, right? So that'd be what? June, right? July, right? That'll put us around what? Mid-August. First, second week in August. Y'all with me there?
Mm-hmm.
And then we'll be right up against the what? Potentially, I'm just saying potentially, we'll be right up against that point of what? You know, either at or above, or maybe whatever, going into the ideal of what? Potential value of what? A pause if the data somewhat gets better in terms of if inflation begins to what? Abate a little bit more, that'll be the excuse for the Fed to say what? We rate hiked enough. Now we need to do what? A pause and then a what? Assess. Right? Operation what? Pause and assess. These people are serious, boy. They don't care. They'll stress test your pocketbook, but they're not going, as they saying they're not going to protect the stock market, right? Y'all been hearing Jerome Powell come out, vehemently saying what? This is not about the stock market. It's not about. But all of his governors get up there and start what? Doing what they call the Hebrew shuffle, right? They're doing the Hebrew shuffle, and they speak in a whole new different what? Tune. Because their goal is to go out there and what? Dog whistle to Wall Street. Jerome Powell mission is to go out and what? Pander to who? Main Street, because he can no longer lie to everybody again, because he's been caught in his lie, right? He can't lie to nobody. Everybody know he's the biggest, fraud base in town now. I mean, he couldn't even keep his governors from what? Insider trading, taxpayers' money into policy. Biggest cover up on this side of what? The new century, and ain't nobody really running that story all day, every day. They sent Martha Stewart to prison for how many years? And she didn't make near the level of, y'all get what I'm saying, right? They sent Bernie Madoff to prison for this, did they not? So just because they're the feds, they get a slap on the wrist. You say, look, I'm not going to put on my 10-4 kufi. I'm not going to get on my soapbox, but it all matters. Why? Because you got to put all those things into consideration when you're saying, okay, again, those are not just the only factors that we use, because we don't, right? We understand that this is still a what? This still is a game of what? The trend is your friend, right? Whatever the trend is, you stay in trend, regardless of what all the, the foolishness is, right? But you need to also know all the moving parts, all the fraud, all the, the real data, the organic stuff, so you can make better decisions with your money. Make sense? Because if you're gonna be out here bottom fishing this kind of marketplace, you better very well know everything that's going on in and around it. You got to be comfortable making a thesis that, yeah, bro, I think the bottom is in for now, but that's what they're gonna say. But is it gonna say bottom is in, but they're gonna come on the back end and say what for now, right? Because they can't even tell. Because again, like a lot of people like the Cathy Woods and a lot of those types of people will just, throwing out these old ridiculous valuations on companies and lying to people, Laura Needham and those type. And these people, look, again, we get it. They got clients. They gotta preach to what? A good gospel. Think about it. They gotta put out on the Creflo Dollar hats. No shots fired at Creflo, but you know what it is. They gotta talk that talk. They gotta talk that talk. Right? Because they're getting paid off fees. Right? Just to have people on the books. Look, for us, we don't have that luxury. We got to make sure this money is sticking much as possible. It need to be gripping as soon as it hit the flow. So you got to be confident knowing whether or not these are moments to be what? Getting all excited about what? Just that what we're talking about here. Is it okay to be bottom fishing? Maybe some assets, but not all. But we talking about the same reality. Is if anything, you better be nibbling like a rat doing the cheese. If you talking about just saying, oh, bro, this is right. Now it's right for the picking, then I'm just going to ask you a very simple question. One simple question. Are we out of demand pool inflation now? And they were like, but demand pool inflation, boy, what you talking about? I don't know about it. I just know about the dip, boy, BTD. I'm a part of the BTD gang, boy. We buy the dips over here. I don't know what you talking about, all the demand pool stuff, and get out of there with that stuff, bro. Okay, no problem. Knock yourself out. Right? Because again, they're going to be asleep at the wheel of understanding. So when demand surpasses supply, higher prices are the result. This is demand pull inflation. A low unemployment rate is what? Unquestionable good in general, but it can what? Cause inflation because more people have what? More disposable income. That money now is being what? Flushed through the system as we speak. We going from that disposable to now into what? Credit. That is not disposable. Credit is what? Emergency, right? Anyway, increased government spending is good for the economy too, right? Not anymore, because now the Keynesian theory value has now again proved to be more problematic than it is helpful. And it's been proven the more they try to make the free market a more Keynesian-based government control environment, the more it tears things up. It's ridiculous how people are accepting that now, that the feds and the government as a whole have to have all the control over what? Stock markets, as opposed to being, doing things to really help what? Main Street or the citizens. They've become, it's crazy. Anyway, they become like rabid dogs to the stock market. As if that's a barometer of what your economy really is. It's not. It's false valuations and fugaziness. We get it. Some companies out there earning they keep, but others are just, they just getting what? They just get swept up into what? This expansion of just money being thrown at it because it's ignorance. Anyway, but it says what? So increased government spending is good for the economy too, but it can lead to what? Scarcity in some goods and inflation what will follow. And when we come from having what they call base case inflation and we start moving into what? Stagflation, that's when it's game over, because now you could almost smell the R word at that point. What is the R word? When we hit stagflation, we almost can smell what? What is the R word? What is that R word? That dreaded R word.
Is that recession?
Recession.
Great recession. Matter of fact, I posted something this morning on Weibo. I was telling people, I think we almost but certain that we're in a recession right now. And we know that it has to deal with quarterly, right? You have to have 2 negative quarters, right? Not just month to month, but the way that the data is going down here, I'm front running the idea because we know, but all intents and purposes, how in the world the next readout gonna say anything less than possibly what? Negative growth. Are we not hearing Facebook saying they're laying people off, Snapchat laying people off, Walmart saying they're struggling with what? Passing costs all to the consumer as far as margin, and Costco and Target and all these places that really matter. Are they not saying that they having what? Softness of business? And we not talking about hiring people to go back to what? Blue chip jobs. People going back to hospitality and leisure jobs. How is that stuff moving the needle in terms of what? Our GDP growth. Does that make sense, guys? I'm seriously, I'm just asking for a friend. So if me to tell me we're finna have what? Just amazing growth all of us singing after happening what? Negative what? 1.4 last GDP readout. It's all but certain that the next what GDP print gonna be, if they don't cook the books, it's definitely gonna be the negative range. Because now people are starting to get what? Laid off. The inflation scenario is not what? Letting up. In some areas it is, others it's not. So anyway, a few more minutes, then we're gonna get out here, guys. So let's look at it. Let's look at this little video real quick. Right? We have story time on here too, right? We have a little story time, right? Let's peek this right here. Let me cut this up so we can hear it. Let's see what they're saying over here in Investopedia, what demand pull inflation is, because this is going to be important. And I'm saying that for a reason. Because you got to take this mindset into consideration. If you're thinking about doing bottom fishing, like really, really bottom fish right now, you got to be very, very meticulous with that, because demand pull inflation is no joke. So let's see what demand pull inflation is.
In demand pull inflation, the demand for goods increases ahead of the supply. Prices go up because of this imbalance. Economists often refer to this scenario as too many dollars chasing too few goods. For demand pull inflation to occur, there must be a constraint on increased supply. For instance, assume an electric manufacturer creates a new device that grows increasingly popular. Demand for this device soars, but there is only one factory making the device, and it's already running in maximum capacity. The device's price will continue to go up until either demand tapers off or the company can build a bigger factory to produce more devices. There are a number of causes of demand pull inflation. A growing economy is the most familiar. As consumers grow more confident in economic conditions, they tend to spend more. More spending increases demand for goods, and thus prices rise. Another cause of demand pull inflation is an expectation of inflation itself. Under this scenario, consumers think the purchase power of their money will decline, so they buy things as fast as they can to avoid the loss in purchasing power. This can happen on a catastrophic scale in hyperinflationary situations. Government spending policy also causes demand pull inflation. When the government increases spending, this increases demand, which causes inflation for the goods the government purchases.
Did y'all get that? Did y'all hear that? Did y'all hear everything that video was referencing? Did y'all get all that? Anybody? Did y'all get that?
I was gonna say, if you could back it up to a little bit towards the end.
Right, I'm gonna run it back.
I was gonna ask that too.
We're gonna run that back. That's something that's like your favorite rap song. You out there, run that back one more time. But you hit that backup button on that thing. But let me hear that again. Let me hear that ad green again. But run that ad green again.
In demand pull inflation, the demand for goods increases ahead of the supply. Prices go up because of this imbalance. Economists often refer to this scenario as too many dollars chasing too few goods. For demand pull inflation to occur, there must be a constraint on increased supply. For instance, assume an electric manufacturer creates a new device that grows increasingly popular. Demand for this device soars, but there is only one factory making the device, and it's already running in maximum capacity. The device's price will continue to go up until either demand tapers off or the company can build a bigger factory to produce more devices. There are a number of causes of demand pull inflation. A growing economy is the most familiar. As consumers grow more confident in economic conditions, they tend to spend more. More spending increases demand for goods, and thus prices rise. Another cause of demand pull inflation is an expectation of inflation itself. Under this scenario, consumers think the purchase power of their money will decline, so they buy things as fast as they can to avoid the loss in purchasing power. This can happen on a catastrophic scale in hyperinflationary situations. Government spending policy also causes demand pull inflation. When the government increases spending, this increases demand, which causes inflation for the goods the government purchases.
I'm asking for a friend.
That's the
I was going to ask, when they said they was buying random things, we're talking about assets, right? Or just random things?
What talking about the part when they were saying what the when the consumer just started buying things in advance? That's what we were talking about, right? They're buying what? What are they buying? Are they buying
big
TVs
discretionary
in
item?
advance? Are they buying lawnmowers and jet skis in advance? or are they buying toilet paper, cases of top ramen noodles, right?
and
Free-dried steaks and bruh. You see what I'm saying? Seriously. And if they did, they bought a lot of those items when they got tax returns, stuff like that, because they knew eventually this stuff was gonna be more expensive. So yeah, they might have bought a few TVs here and there, but again, going forward, you know what I'm saying? That's done. The majority of what they buying now in bulk is gonna be just what we're talking about. Ubiquitous items. That's why Walmart could be struggling on the, consumer discretionary, items in the store, and a Target, on a high dollar side, because they got to pay for the real estate that's underneath their feet and the price of those that merchandise inside that store. Again, we talk about them having to deal with this right here. That could be a dagger for a lot of companies.
Yeah.
Too much SKU, right? And not enough of the Not enough of the the right SKU. That could be very problematic. So that's why Dollar Tree can they can win in this environment, even though it seems like they'll be hurt with supply chain issues like everybody, right? But you're talking about most of the stuff that they selling is on the grocery side, or knick-knack things that really ain't really cost them a whole lot. And it's odd because a lot of people are banking on definitely Dollar Tree them going on. But it's different because now you have to be such a good read on being able to parse the straws and say, okay, is this company more pure play on this? Okay, what do they have inside of inside of their the inventory, inside of the house, warehouse, whatever. What are they dealing with in terms of the inventory, the SKU that? So it matters. You know what I'm saying? Certain things are just built for the kill, and some things are not built for the kill. They need a more subtle environment where everybody got a little extra, they can move around and occasionally walk into this environment and spend here, beyond the fact that you think that most people may be shopping and it may be a part of a certain class anyway, but still that matters too. You see what I'm saying? It's a very fine line here, guys. But the fact that we're having these conversations is that we need to be comfortable in knowing if we're going to be comfortable, trying to invest in a marketplace that seemingly is continuously always whistling that and trying to whistle that we're in the all clear, and there's no really true conscience on that. Can you really be comfortable in doing bottom fishing this market like that in the way that they're trying to tell you to? In this case, I'll go on a limb on the record and say it. I'd rather be late to buying the dip this time around than being trying to be early. Because you're not going to convince me when they start doing, when they do that next 50 basis point rate hike in June, literally days away from now, or it'll be 15 when they're going to do it on the formal meeting. All right, June 15, make sure y'all put that date in your calendar, right? Make sure you don't, be sleep on this day, right? That's the next, major Fed meeting, right? That's when supposedly QT is actually supposed to start, right? That 45 billion, right? And quantitative tightening, right? That 45 billion, we'll see. And then the extra 50 bips rate hike value, right? Let's see how the market, they're going to tell you today that they're working to be able to price that into the market when it happens. Do y'all think, I'm just asking, and this is no right or wrong answer to this. Do y'all really think Wall Street is ready for that extra 50 basis point rate hike on top of the $45 billion quantitative tightening? Do y'all really think they're ready for it?
No, not even close.
Why would y'all say not?
Because just all the other economic data that you have, plus all the other the defense, the whole Russia, the China, all that other stuff is just compiling on these markets. And here you go, you about to add another 50 bips to in June. No, that's not gonna happen.
And again, the elephant in the room is definitely that what? That 45 billion quantitative tightening. They're not easing, they're starting to what? Tighten. Did y'all know we had the biggest reverse repo operations, auction ever in history about 3 days ago, 3 or 4 days ago? I don't know if y'all caught that, right? Y'all know what we hit on the reverse repo operation?
95.
And I took the screenshot and didn't even post in the group because y'all know I love that kind of stuff, right? Them not data point. I was so busy that day, I didn't get a chance to even share it with the group, guys. And I gotta share this with the family. I know somebody already saw it. That's what I'm telling myself. I said, somebody gonna post this, right? Because y'all know we live on the New York Federal website and the Fred and the St. Louis and all that stuff, right? We had the biggest auction ever in American history. I'm gonna say this, even in world history. We had a reverse repo operation of drum roll, $2 trillion came across the tape, guys. I got the screenshot. 2 trillion in the reverse repo operations scenario. If these banks ain't flush with cash, they ain't flush with cash. This is ludicrous. Remember, I told y'all literally months back, I said the only thing that's gonna be proper to market up once they start providing the rate hikes, these little penny ante rate hikes that they ain't really doing nothing to fight inflation. They know at the end of the day, Wall Street knows how to go look this market over here. Because then this is what's really backstopping a lot of the market. It's all that cash that's sitting in the reverse repo operations. That extension of banks trading bonds for for cash.
So they did that. They did that. What day? They did that.
I think it was Monday. Famous mistake. I'm gonna go on and share. I know I'm a day late dollar short on this one. Sometimes I get busy. But I was gonna share them with the group, man. I know the fan gotta see this. I was telling myself that y'all already saw it anyway, right? It was just like, I know they saw this. I know they caught this here. It was 2 trillion.
Well, they did it again today.
See, because once you crack open the ceiling, it's what?
That caused the market.
You know what I'm saying? It's game on now, right?
Yeah.
Once you crack that ceiling, it's game on at this point. And this is why the market is ripping as well, right? On top of other stuff, but y'all know how this stuff go. It's in tandem, right? It's always the domino effect, right? We need one justification to to sustain the other. You see what I'm saying? This is high level foolery here. This is some high level tomfoolery. High level tomfoolery. But it was 2 trillion. And that is an extension of why the bonds, think about the 10-year yield had been ripping. Now all of a sudden it's backing off a little bit. Y'all notice that lately it's been pulling back? Again, convince me what has changed in order for that value of the yields not to be what? People ain't still going out there buying bonds. This is stuff that the bonds, in terms of what the Feds are just sitting on. The fact that they're sitting on their tranche of bonds that everybody else is not buying, that's still somewhat keeping bonds somewhat a lid on the bond market. Make sense? Keep in mind, they're taking ownership of banks' bonds, and they're exchanging it for cash to give to the banks, right? Beyond their reserve, they got more than they need in terms of reserves. The fact that they just sitting on the bond, because they already were bought. They were already bought, obviously, right? Because the banks have already purchased them, right? The bonds that the Feds are sitting on, they just sitting on them. So that means, everybody else can't sell these at least, right? Hence, you can't really push yields higher. So it's like a slow, it's ebb and pull, right? It's like they're doing just enough to keep the yields from just really exploding. Does that make sense? Y'all follow me here?
Yeah.
This is how this stuff works. This is how this stuff works. But again, once you know how to, when you know how to follow this stuff, you will not be what? You will not be fooled. You will not be fooled. Man, I gotta find it. I have it too, because I was like, I gotta share this. I gotta share this. And I didn't get a chance to even share it.
I put it in the chat over.
You got it? You found it?
Yes, sir. I put it in the chat.
Thank you. Appreciate that, family. So this is why, this is why we were just ripping like that. See what I'm saying? Or the ideal of the market is saying, okay, well, we got to flow a little bit, because literally at around this point here, or around this point here, of course, that's when the bonds start start backing off that 3% handle, 3% yield on the 10-year, right? That 10x. And now it's, the TLT began to get a little bounce, right? The dollar began to kind of pull back. Keep in mind, we had hit peak dollar too. What we had hit? We had hit $1.05 on the DXY, the Doxy, or the Dixie, right? We had hit 105. And all it's doing now, the dollar is just pulling back off that basically blow off top. By way of that, it caused equities to get a sympathy bounce. See right here? Couldn't make this stuff up. I mean, it's clear at this point how to trade the inverse thing. See, that's why I keep these things up. What do we hit on the linear regression band here? Where do we hit?
The bottom.
Y'all see that right there? Well, I got the crosshair on the chart right here. What do y'all see right there?
Was it 105?
We hit 105, and we got outside the top of the the linear regression band. This was 100% sale of the dollar at this point, right? Where were we on the RSI on the dollar? 75. See, that's why I said it's not like these companies are doing and saying anything that we already don't know. Wall Street is just buying short squeezes, because a lot of the stuff was oversold. They buying into the They buying into shorts covering, which causes the stock to the squeeze. We're not in all clear. It's just some of the antithetical assets are just they're just getting people taking profit in them. They made so much money in them in such a short order time frame. People taking profit. Consequently, the adverse to that would be other assets that are downtrodden gonna catch catch a bid. And all I'm saying is that's fine, because we're gonna trade those trends regardless. We're gonna trade the down pivot and we're gonna trade up. But if you just saying this is the body dip culture, meaning we're back, we're in all clear, meaning you can start adding to your big boy positions. You can add, like I said, you nibble, but we ain't just opening the spigot, right? Because if not, you're gonna find yourself saying, man, I could have saved them dollars. I could have saved that money, right? And got it a little bit cheaper. Now, weirdly so, the dollar sitting right at the bottom or the base of this linear regression band. They gonna either have to grenade it, bomb it, ether it, hit it with a COT a dog a Claymore lineman, a landmine, or they're gonna have to let it bounce. It's the same thing with the VIX, right? Because y'all know the VIX very sensitive, right? It's the same thing with the VIX. It's sitting right in in a very ambiguous, well, in this case, you can say it's ambiguous perspective, but it's still somewhat it's still flagging. It's still in the bull flag. Why? Because you have How do you determine the uptrend again? By what? How do you determine the uptrend?
Higher lows.
By higher lows. Is the VIX still not sitting in the higher low perspective?
Yeah.
Clearly it is. Right? Here's our most recent, because you got to see the measure of the volatility on the VIX is a little different than a lot of other instruments. Why? Because it's a rut. It's a rolling indication of risk, right? A risk factorization in the marketplace, right? Even if you go back to these guys, clearly still in the higher low, but just coming off this last pullback here, you start over again in the VIX at that point, that junction, even though it's still higher than these guys. Everything from that point on is stair stepping to the to the upside. Stair stepping to the upside. Stair step, even where we're at now, stair stepping to the upside. You will need the VIX to come down and clear those guys there, 26, and then come back down and probably test the 200 on the daily, which is roughly what, 24.5. And then you wouldn't have to have the VIX close. I got to say this. It would have to what? Close what? Below it, not hit it, bounce around, do the Ike shuffle or the hammer or whatever. But it needs to hit it and then close what? Below it. If it don't close below it, it's still what? Risk on in terms of what? Volatility. Make sense? Y'all with me here? Y'all know what the indicators, what to look for, because then you can say, well, a lot of these other assets that beat now, yeah, they could probably catch a bigger bid and that may spark a rally, because they try everything that Wall Street is doing right now is that they're trying to do what? They're trying to spark a what? They're trying to spark a rally. I want to add a lot of stuff like everybody else, but I just can't do it. They can't bring ain't enough salesmen they could bring to my front door. Say, hey, Mr. Addison, won't you buy the market right now? Please, sir, buy the market. Come on, we got a bean pie. What you need? We'll cut your grass. Buy the market right now. Hey, bro, look at y'all. Get out of here, man. Put these pit bulls on you, bro. Get out of here if I put these pit bulls on you. Get out of here. Right, I'm gonna open the door. Get them, right? Get them, right? Get out of here. Seriously, because they're gonna sell you that pipe dream. They're gonna sell it. They gotta sell it. Why? Because they got clients, right? We got what? We got each other, right? We ain't gonna set each other up for failure, right? Because they're using other people's money to make these kind of what? Decisions. So we have to be very discreet with our decision because it matters, right? To us, right? But we got all the indicators to let us know what we should be doing or should not be doing. Make sense? So that way we stay in the game, not too far ahead of the game, and definitely not what? Behind the game. Because this is a game of what? Now you have to be very meticulous about how you move. You can't be too far ahead of it, and you definitely can't be behind it. You got to be somewhere right in that sweet spot. That's why they call, what kind of market is that we're in right now? What kind of market is this?
Bearish.
That's the overall sentiment. But in terms of how you view the market, in terms of certain assets to buy, what kind of market is it? We talked about this before. What kind of market is it?
Keynesian market.
Right? That's the overall energy of it. But I'm talking about actually when you go do your shopping, what kind of market you have to be very good what?
Staples.
But that just those are items that you would. But what kind of your overall energy of certain things that you're going to buy within the space of staples, that you have to be very, very good at what? Finding good deals, right? So consequently, it is a what kind of market again? It is a what? Pickers market. Make sense? You have to be really good at learning how to find what? Those right assets. Man, we talked about this before a while back, months and months back. This is a picker's market. We're going into a what? A picker's market. You have to be really good at that's like you going through your garden and trying to figure out which particular vegetable, whatever, it's gonna be that what? That one. Y'all know them jokers in the South, how they find them good watermelons? All right, now I'm finna go there, boy. Y'all finna maybe go there. Well, how you find a good watermelon in the South? I joke like, man, you gotta get out here with that. After ain't no farmers up here, bro. I live in the concrete jungle, boy. We don't do no watermelons up here. How'd you buy them? But see, it's a what? It's almost like a ritual in terms of how to find out what that very sweet watermelon, right? You gotta what? Roll it on the side a little bit. Look at the coloration in the what? In the hull and in the skin. You gotta what? Feel the weight of it. If it's full of water or if it's light, right? You gotta what? What they do when they go to the grocery store, them real fishing out of the watermelon, they do what? They thump that thing. What y'all know about that thump test, right? It's like echolocation. You listen for something inside that watermelon to let you know whether or not it's full or not, right? Or it's y'all get what I'm saying, right? I know I ain't the only one up here that know about this stuff, right? I can't be the only one. But it's a picker's market. That's what that is. It could be cantaloupe. It could be whatever. You have to be a good judge of what? Good judge of what?
Good judge character.
Right? In this case, the character value going to be what? The companies. The products that they offer, the services that they offer, whether they are what? If they're notable for this kind of what? Demand what? Pull inflationary environment. Does it make sense? Because it has to matter. Costco, again, we're going to end on this. Costco had earnings tonight, right? Again, a very good read on a lot of different values of what the consumers may look like. Now this stuff is so it's oh my goodness, couldn't make this stuff up. Look right here. What do y'all see right here at the top of Costco up here at 606? What is that? Somebody give me that pattern. What is that? What is that pattern right there?
Double top.
Say it again, over Jeremy with your chest.
Over a double top.
What does a double top denote? What kind of signal does it give? It gives what kind of signal?
Downtrend.
Right, downtrend, or we know it to be what? Bullish or bearish? Is it bullish or bearish? What is a double top? Bullish or bearish?
Bearish.
Bearish, right? Clear as day, right? Not rocket science in that regard, right? That means you have a failure of breaking through over a major resistance. Costco fell into its earnings because it was at the top of what? The linear regression band, and you had a double top peak. This was the most easiest short into a print, and then others sympathy plays that helped bring it down in terms of who? Target, right? I gotta use that French value name to it, Target, right? Walmart. I already gave you a precursor of what was potentially to come for who? For Costco. Their business models is only separated by what we looked at in the very beginning when we talked about what? Low income, middle class, and what? The upper echelon, high income. Make sense? When we went through all that, now y'all can see that correlation now. See how it makes sense? You can make the correlation in terms of who the shopper is. What are they spending on? What are they buying? Y'all just saw the video on demand pull, right? What did they say when the consumer get to a point when they start what? Buying things what? In advance because they're trying to what? Get ahead of inflation. They ain't buying stuff just because they just got it like that. They buying to kind of get ahead of what? Having to pay more for it what? Later on. So it brought it down from that double top, which was clear. And then you lost the 200 moving average. Are you kidding me? You lose that, you definitely in trouble, right? Man, let me get thunder here. Let me get thunder. Y'all may not be hearing me now. Let me get thunder, boy. That thing below that 20 on the RSI, on that 200 moving average, I'm selling it. It get above that 200 moving average, I'm buying. Until something changes, you stay, you got to what? Pick your battles rightfully so. And then you have the 20 moving average cross below it too. Right? So you went from 602, 609, all the way down here to what? 407. Now we caught the bounce when it kind of double bottomed here. And at that time, I was still telling, some of us like, just be cautious if you're going to, buy Costco here. Now it turned out to be a good bounce. It was a very good bounce, right? When it came down to hit that 480 area, I said, just be cautious, right? Because I was in my mind, I was like, you know what? This is more of a what? An options trade at this point, as opposed to it being a common share trade. And I made that known during that time when we talked about it actually too. This is more of an option trade. I would buy more, I'd be more, inclined to buy risk through the options market that as opposed to buying the common shares and thinking that, we're in the all clear, even with a company like Costco. It bode well for option trade because you got more for less and you got a chance to see if the stock was really going to weather all the so-called inflationary, storms that they said that a company like Costco should be able to do. But apparently it did not work out that way. So it went from 489, 480, 480 area, whatever, all the way up to 600, $600 base, double top and flushed out of there. A massive, I don't know if you can call that a dead cat bounce because it took out these guys over here. It was just, that was just such a fool's gold bounce here. It just trapped a lot of people. It trapped a lot of people in the 500s. They're buying it. They was buying around 550. They was like, oh, this is a great inflationary stock ever. And then what happened? Literally, it was all good just a week ago. They gave all that money back, all of it. And it went lower. It came all the way down here near 400, guys. Boy, you talking about, boy, I would be calling my broker, boy. Look at him. I send them one of Miss Millie pies, boy. They want one of Miss Millie pies? I got you one of Miss Millie pies. Right? Y'all already know what I'm talking about, boy. Look at him. Ooh, boy. Send one of Miss Millie pies to the broker. This here don't make no sense.
Wide only pies.
Mine only pies, boy. Ooh. Boy, look at him. Because they would tell you what, buy. Jim Cramer them, buy. All them jokers on there, they were like, buy. It's Costco though, bro. Buy. Up in the 600, buy. And then when they got real in the field, sell. Right? They be going on, sell.
Right, got them.
Ultimate, got it. You can buy all their bags.
Hurry up and got up out of there.
I'm telling you, up here looking like the little stick man, right? It actually got a hangman, what, pattern for real. They got a hangman pattern for real. You up here swinging, for lack of better diagram, but y'all get the point. It is a hangman candle though. But rather than that, they trapped a lot of people up here. And then what? They left them up there holding the bag. What did Costco do tonight for us at earnings?
Coming on down. Damn.
Look at them. These are the numbers. Estimate 304, they came right in line and actually missed by a fraction. Estimate for the earnings was 51.5 billion. They came in at roughly around about 52.59. And that only reason they beat on earnings barely, and keep in mind, they had a low bar earning. I mean, they had lowered the estimates for earnings. They barely beat. The only reason they barely beat was because of everything we've been talking about falls margin. They was able to pass some of that cost off, right? And it still didn't really bring the house down in terms of blowout numbers. Ain't that something?
Barely.
Just barely. Can you see, bro? Barely. Remember that little girl? Can you see? Barely. Barely. I got it. Barely. I'm
legally blind.
Right? You're blind. Can you see? Barely. In the back of that police car, you went there. God, thought they had some stuff. That's crazy. And they lowered their bar in the they lowered the estimates into the earnings. Lowered it. And Costco was already down here on the RSI, it was oversold like crazy. And it still didn't help. So tonight, it's stock up or down right now. It's still down. It's definitely after 8 o'clock. What I'm talking about. But the stock down, right? They down here. What the stock do? Let me see. Yeah, it's still down. It dropped from 465 down to
455 or something, or 440 something.
Yeah, it hit 445, and then it bounced back up to 455. So it gained back at least about 10 points in the after-hour session.
It might be up in the morning.
Possibly, because we've been seeing that a lot lately. We talked about it very early before you came on too, over Jeremy, in terms of how, see, this is the kind of marketplace that's they hoping a lot of things work out. So they're taking risk by buying a lot of these dips. I'll talk about it earlier. Companies are missing on top, bottom, and guys, and they still catching the bid. We've seen this market before, guys. We've seen these kind of markets before. This that delusional buying and thinking they from the front run bad data into potential good data. Now they could be right, but they are very much doing an uphill battle, right? With high slippers on in the middle of a blizzard, right? Right? I mean, the worst conditions ever, and they trying to traverse that kind of uphill battle.
You said high slippers.
I'm talking about high slippers. I'm talking about them old cheap ones too. The one you remember back in the old days, the little cheap ones, they got that bad grip on them, and when you slide on anything, boy, you slide on grass, but them things so cheap.
Right. Slide on concrete.
I'm talking about you could make this stuff up, bro. And people, but again, same way we saw right there with Costco when people buying up here 500, 530, 550, bye. And now the stock down here at 455. Man, so again, in closing, we're talking about bottom fishing, guys. Bottom fishing? Yeah, we're talking about bottom fishing. If you finna tell me that the lake or the river or the sea or whatever is ripe conditions to be out there bottom fishing, then you got to be able to produce a really good evidentiary type of case to your bank account why you need to be letting a lot of money go down range right now. And ain't nothing wrong if you do or you don't. This is not about, trying to browbeat you into taking one position or other, but our goal is not to, be responsible for the value of, what each individual do. It's more about building a collective body of information so we can make better decisions with. Make sense? We're not saying certain things may not be worthy of the nibble, but they're definitely not worthy of the what? The buy. Like just two hands, fist throwing everything at the market. This is not that kind of marketplace, right? Because the one thing that keeps us in a level of pause is again, what kind of demand, inflation are we dealing with right now? What kind of inflation is this right here, guys?
The demand pull.
That's the worst type of inflation. It's the worst type. It's worse than cost push. Worse than. Right? This matters, right? This one I'm saying where it matters. Right? Cost push inflation does not hold a candle to demand pull, because demand pull is the most artificial value of what? Creating inflation. Government's printing all this what? All this funny money, right? See right here? Let's listen real quick on what cost push is, and we'll close out.
With ShareBuilder, start a self-employed 401k plan for $25 per month or less. It's the
Cost push inflation is caused by an increase in the cost of production due to higher prices for raw materials or labor. As the cost of production increases, the supply of the goods being produced decreases. This decrease in supply is usually coupled with inelastic demand. Since the demand stays constant, the prices for the goods goes up. The oil crisis of the 1970s is cited as a classic example of cost push inflation. The OPEC countries increased the price of oil. Demand for oil remained constant and the price went up further. Since oil was used in so many products, the cost of production of those products went up and the result was inflation. Critics of the concept say that the government increasing the money supply is the real cause of cost push inflation, not the increase in the costs of production.
Is that the kind of inflation that we got right now, guys? Or do we need to run that back again? Do we have cost push inflation, or do we have demand pull inflation? I'll let y'all be the judge of that. This is the reality of the marketplace that you're investing in hopes that things are somewhat, again, getting better as they would have you believe. In essence, where you can feel more comfortable in putting good money on, the glass half empty theory. Right? Or, excuse me, the glass half full theory. That's the narrative of how Wall Street will build it. But you're a better read on the markets than they are, apparently. Apparently. Wall Street just like the old sister, right? Can you see? Barely. They don't want to see the truth. They barely want to see the truth. They barely want to accept the truth. This is not different than the market of old. But they know a lot of investors out there who have no clue about this stuff. It's easy to finagle them into thinking that everything is all good. That's not, again, our goal is to make sure we're accountable for what we can be accountable for based upon what we know. It ain't hard to connect those dots, see what the tea leaves are looking like. Look, we get it. All right, we get it. So if you are going to be a good bottom fisher, and I like fishing, right? That's why I use a little weird analogy sometimes. I love fishing. And that ain't hard to catch catfish, trust me. That's one of the most easiest fish to catch in the lake or river or wherever. But the more game fish, the hard ones to catch, like them certain, yellow perch and smallmouth bass, and real game fish, predatory fish like that, you got to bring skill to the table. Skill to the table. It ain't hard to bottom fish, right? Because at some point, if you leave your bait out there long enough, something will come along and pick it up, right? It's the same thing if you buy the market prematurely. Now, you may have to sit at the lake a little longer than most people, because if you buy that dip and the market jumps a little bit and then comes back and take you out and go lower, now you got to hope, sit there and hope, again, somebody come along and buy your bags and bail you out at some point, or bite that bait. because you may have bought a little too a little too premature, right? But you have to be able to assess that based upon what your pocketbook look like, what your goals, look like, right? Based upon, the full scope of the market, right? The full scope of the market, right? The full scope, pre-market, post-market, intraday, and futures. Those are just moments to look at the market, in this case, and just kind of seeing how, people are responding, to certain in this case, pivot buying moments, right? You're assessing all that is my point. You're assessing every aspect of the market and saying, okay, is this a fool's goals bounce, right? Is this a fool's goals rally, right? Or is the real deal? Because if you say if it's the real deal, it has to now negate everything we've been talking about today. Demand pull inflation, the idea of stagflation being an issue, the whole issue with Russia, Ukraine, China, all these things got to be really on the upswing at that point. And then you can say, I'm early, or I did it really good at bottom fishing the bottom at this point. Make sense? That would have to be the case, right? And this is not to stop anybody from buying the market. This is not what these videos are about. It's just to give you help you have a collective value of looking at everything objectively as you're supposed to. Right? That's what training is for we can think tank, look at things for what they are, then make better decisions based upon what's going to be good for your individual money. Right? Because you are responsible for when you hit that buy button or hit that sell button. You're responsible. No one else, you. Right? So it's better to have a good understanding of what information that's out there so you can make better decisions. All right. So that's it, guys. So I ain't got nothing else, but I really want, be able to kind of speak to that because again, we've seen this picture before, right? We've seen it before, right? We've heard that 8-track before, right? We've been here before, right? We that record there ain't nothing new. We've heard that record before. And it's weird too, because it's looking like the same environment as before when it was making that big old decoration of signaling in the all clear. It looked, almost identical. We're in the all clear, bro. We rallied from 420 back to 462. They got their prize on possibly 430. We get it. I get it. I understand what they're doing there. Right? I see what they're doing here. Right? It's uphill battle. I can assure you that. But again, Wall Street got, look, they're stress test anybody to try to fulfill the mandate they can. But all we're saying is that guess what? We're going to play the trend regardless. But we're not going to be clueless about, what the broader market, is really signaling to us. We're not going to be clueless about that. Right? We understand that the trend is your friend. And we will trade trend. We will trade trend. We will trade pivots as we're, trained to do. Right? When it break levels and, give us buy signals and things happen in that regard. Yeah. But, outside of that, it's just what it is. It's more, in my opinion, of course, I got to speak for myself. This is still more of a trader's market as opposed to a buyer's market. That's just my opinion. Just still too much volatility out there. Too many unknowns, many uncertainties out there. That's just my opinion. I could be wrong like anybody else. Right? That's why this stuff is not an exact science. Right? But there's a lot of data that tells us it's not in the all clear either. All right. So that's it, guys. So I don't have anything else outside of that. Again, no, it wasn't one of those long knockout, drag out kind of nights, but we hit it, make it stick, and we're gonna go, marinate on that because again, we got a 3-day weekend coming up. This, with Memorial Day, of course, the markets are closed, next Monday. So that means you got, extra day to kind of get involved with family, friends, and enjoying yourself, right? A lot of you guys be like, man, I want to trade something, right? The crypto market still be pumping, right? All right, but nonetheless, no, just use that time to kind of study when you can in your free time, whatever. Get your little, little autodidact moments in, so you can prepare for the following week. Because again, when we come back out of this Memorial Day weekend, we getting ready to come into the month of June, boy. Poof, we getting ready to come into count down the days to that next Fed meeting. Wall Street got a little small window. They got a very small window between now and to June 15th to do what? They're going to do everything in their power to try to pump this market, right? Because it's all, for them, it's a game of front loading what? Bad news, right? What do markets love to do above all things? climb the wall of what? The wall of worry. They will climb that wall of worry best way they can. Low volume algo, just pumping the market, grinding to the upside. They'll find a way to kill volatility if they can and just grind it up. And then when the reality coming to fruition, it'll dump or whatever the case. But we ready either way. We ready either way. All right, so that's it, guys. So I know keep us any longer than necessary at this point. Thank y'all for coming in. Again, I know we're a little late tonight, but as always, I hope this information is edifying. It gives you something else to play with. This is a game of just putting pieces together, right, of the chessboard. And eventually, again, this stuff is going to begin to become more and more, applicable and applicable for your use case, right? It won't seem so enigmatic to you as you begin to learn and play with this stuff more and more and more. Again, it's a game of base hits as opposed to home runs. It's a marathon, not a sprint. Take those things in consideration each and every time before you hit that buy button, before you hit that sell button. Make sure you have an entry plan and an exit strategy plan, right? You have to have these things in play, especially in this kind of market environment. Do not be chancing it. Do not be, unhedged properly if you know you don't have a better conviction, right? If anything, don't take no trade at all. That's the best trade you probably could take if it's just too much to deal with. Get that good intel. Get that knowledge, that firsthand knowledge from a spectator perspective. So when you go to make power moves, you have a little bit more knowledge underneath your belt. Make sense? So that's what we're going to work with, guys. So that's it. So I don't have anything else, guys. I appreciate everybody. We got any questions here before we get out of here, guys? Any questions before we get out of here this evening? Anything, gentlemen? Anybody? Ladies as well? Anybody? Any questions? Any questions here on the way out the door? Thank everybody on the YouTube side as well, as always. We appreciate you guys. Family over here as well. Thank y'all for tuning in on our Thursday training sessions as always. We appreciate you guys. 100% over Snotball in the building, over Ghost, Ghost Alchemist in the building on the YouTube side, holding it down. Our family, everything. Miss Monica Lamb, of course, she was over there. Over Zane in the building, over Jeremy, he was over there as well, over Al as well, everybody in the building. Everybody that may be listening that haven't typed, we appreciate you as well, right? Everybody that tunes in to us, we appreciate you, right? So just take those things into consideration again, guys, so we can be better at making good decisions, right? So go ahead. Somebody had something?
Nah, I was saying appreciate you, Oba.
And you already know it. It's anytime. It's village first, right? On Ubuntu. It's always village first over here, right? We are peers at this stuff, right?
Thank you, Oba. Santi, always.
Appreciate it, right? Karibu. Y'all already know it. Karibu to everybody. Y'all already know this. It's family first over here. It's definitely Ubuntu. We're gonna build this bridge, right? We're gonna build this house, right? We're gonna that Under Armour commercial. Will you protect this house? But I was all in Under Armour headquarters in Baltimore today, coming through there in that dusty traffic. But we gonna build this house, like man, y'all be building traffic.
Ray Lewis,
right here, build these streets up here. There's a regular road. Boy, you talking about regular road? I dog on Baltimore stretch, boy. They got some dusty roads up around that area there, boy.
You ain't
Goodness,
lying.
but they got some bad roads there. And that's that's a little industrial port area too. But anyway, I ain't gonna talk trash because I know even certain parts of New York, but the other parts ain't, as well, right? So I keep thinking about these old wild places like that, like the Holland Tunnel, then and the Baltimore Harbor Tunnel, right? The Holland Tunnel going out of Jersey City into New York. That's a boy. Where my New Yorkers at? But that one there, boy, you got about 13 lane conversion on the what in the two lane. It's messy out there. I think about those things. I know I'm it's passing here and closing, but that's how I look at the stock market, man. Like all these people converging on one or two lanes, right? And it's ragged, the roads ragged, people just trying to squirt past other people. It's just a mess. But anyway, y'all know what to do. Y'all know how to traverse this stuff, guys. We building it so we can make better decisions and drive properly based upon the conditions of the road. So, but that's it, guys. I ain't got nothing else. So thank y'all for tuning in. Again, any last question? That's it. I think we got everybody for the most part. Unless you guys got something else, we're gonna convene for now until we pick this thing back up. So tomorrow, again, like I said, just be comfortable knowing that tomorrow could easily be a very low volume day. Why? Because most people who got big money, they probably shut down their broker houses today. Hence the pump that we got today out of the SPY was at least 2 days worth of at least 2 or 3 days worth of work. They probably cashed out for the most part. On people gonna be trying to trade the market tomorrow is going to be what? Retail traders and a few algos. So be very cautious of that because it's a 3-day weekend. Then people already made their money really today. All right. So we'll see if there's any opportunity out there. So be cognizant of that. You know, they might try to grind the market up and chop it out and make it go sideways, kill everybody on theta. It can get ugly if you're trading options, definitely. So just be conscious of that as well. All right. So that's it, guys. I'll see y'all in the next one, guys. So until then, again, peace, power, and profit.
Peace, family.
Peace, family. Shimhotep to the
Peace,
family.
power, profit.
Peace, power,
Peace, family.
profit,
Thank you.
everybody. Peace to the fam. Right. I'm Bantu,
Yeah.
all the good salutation. We'll be back in this thing. Again, back in the groups, back in the Discords. You got questions, hit me up. Don't hesitate. That's what I'm here for. All right. Appreciate everybody. Y'all have a good evening, guys. Good night,
You
everyone.
too, over. Peace,
Okay.
Peace, everybody. Peace.
Peace, everybody.